Testing, echo.
I'd like to open this meeting today is June 1st, and starting time for the meeting is 6:39. Stephanie, please do a roll call.
No problem. Chair Giulioni. Vice Chair Rossi.
Present.
Commissioner Quaid.
Present.
Commissioner Elsner.
Here.
Commissioner Finley. We have a quorum.
Let's begin our agenda with the general public comments. I'd like to make a note. This item is a forum for public to make comments on agendized items or general topics only. This is the only time during the meeting that public comments will be taken. So given the nature of the meeting and our agenda today, we're going to hold that very, very tightly. Please.
We have one public comment from Mr. Betta.
Just to clarify, Mr. Chair, there'll be no public comment on the individual agenda items.
I understand that these can be submitted in writing, but there'll be no public comment for this week.
Is that part of the agenda publication process? Was that noted? Was the public notified of their inability to have public comment on the items?
They can have public comment right now.
I mean, issue specific to each of the agenda items, with all respect.
My understanding is the protocol for this commission is that those be submitted in writing, and that we can handle those afterwards. Is that correct, Stephanie?
That is correct.
Thank you.
And is such printed on the public resume, and I don't mean to put you, Stephanie, in the place of responsibility, but is there a public disclosure on the Brown Act publication of the agenda 72 hours before this meeting? It says the public comment is not allowed for specific agenda items. Just a point of order, or clarification for my well-being.
Our public comment guidelines are posted right above, and we use this period during the general public comment at the very beginning of the meeting.
Sorry, I missed your
Our guidelines are posted on the agenda, and we do have an item for general public comment. That is the time period where we will take agendized items as well as any other topics.
Brilliant. Thank you. I appreciate that. I forget the offer this.
That having been said, thank you for the clarification, your patience with that, folks. There's a history that you're about to create, and I speak to the Finance Commission in its 2023 version. I speak to a Finance Commission that is now responsible for the contents of the Citygate report and the egregious failures of management that led to many hurt people in this community and many hurt employees. You're responsible for understanding that. You're not responsible for wearing a hair shirt. There are some on the staff that seem to feel that people need to be punished. That's not at all what's being said. But can we embrace the lessons of that as part of the dialogue today? And one of the lessons is just having public dialogue. Now, the GFOA, and when they reviewed my report in June, which was a condition of mine to give it to the South Pasadena and early, they said there are public problems that deserve public responses. Go look at the article. I think the Finance Commissioner 2023 can be the leaders in that. I think we all know what happened. I think we know the struggles of this administration with 2 years without a finance officer. We also know that the Finance Commission was serving as a rubber stamp for most of this time. Sorry, that's uncomfortable, isn't it? But it's true. Now you have the opportunity to change something. What is before you is the opportunity to finally speak to your city council instead of being spoken to by them. There are matters coming before you whose factual content merits that the Finance Commission give high-level advice. Stephanie, tell me when I have 30 seconds. It's 1 minute there is what I see. High-level advice to tell them they're making a mistake. If it ain't y'all, if it's not us, if it's not the people who populate this meeting, then who's it going to be? Did you take this position because of the genteel and proper and elegant nature and be on time for cocktails at 7 o'clock South Pasadena culture? Well, they're only a part of this entirety of this community of 25,000. There are the people that are just wanting things to be done right because that's what you have to do. So buckle up your constitutional hold, folks. There are things coming to you that are demand you're going to say something to the city council, such as a budget coming to you next Wednesday that they want adopted after you see it tonight. And that agenda is already out, unless I'm mistaken.
We have no one online and there were no written public comments.
Review of the fiscal year 2023-24 proposed budget. John.
Thank you, Chairman. Thank you, Commissioners. So tonight we will be talking about the 23-24 budget, but I want to kind of discuss a couple things before we jump into the presentation in of itself. So there's been comments, concerns in the community regarding certain things that we've done with respect to the budget. The first one had to do with the creation of a new CIP fund, as opposed to how it was broken apart in prior years. So at the March mid-year presentation, I brought up to the attention of everyone, we were going to create this fund and we're putting all these projects into this fund so that we have a much more concise view of all projects. So think of it this way. We want to know what are the projects that we have, what are the costs of those projects, and how are we paying for those projects? That's the ultimate objective in this reporting. So with the creation of the CIP fund, what we're doing now is we're using, and this is kind of an arcane thing in terms of accounting terminology, but we're using transfers as a mechanism to fund the projects within the CIP fund. So as project costs are being incurred in these specific projects within the CIP fund over time or periodically will be almost like billing these funds via transfers. Some projects are on a reimbursement basis. And so at that point, we will submit to the cognizant agency all the documents and supports for those costs seeking reimbursement. That fund will then receive that revenue. And upon receipt of that revenue, we will then transfer that to the CIP fund to cover those costs. It's a cost reimbursement approach, if you will. So the beauty of that is severalfold. It makes it a much more concise view of all the projects. It also allows you to see history of almost like the funding of it. When is the funding occurring? How are we paying for this? The timing of those payments throughout the course of the year. So we could literally at the end of the year say, okay, here's all the costs that we've incurred within the fund, and here's how we've paid for those costs on there. So it's a very standard practice. Many, many agencies take this approach. It's a much cleaner approach. The one thing with it is it requires that you have to constantly be vigilant on your accounting, and you have to keep your accounting clean on there. The other area that I want to address before we jump into specifics in the presentation has to do with the insurance fund. So there's been concern about the insurance fund and having deficit conditions on there. And when you're looking at this, you're thinking, okay, well, why don't we address these deficit conditions? Why don't we, transfer money there to make these funds, into a neutral state? And there's complications. There's complications is the right word. There's nuances as to the reason why you may not want to do that. Primarily this. In the insurance fund, every year we do an actuarial report. And we're doing one right now. We have estimates that we're building for the end of this fiscal year as of June 30. These actual reports basically break down liabilities between general liabilities and workers' comp. But within those two components, they break out what they estimate to what they think is going to happen within the next 12 months and what's going to happen in the next 20 years on there. So there's a lot of uncertainty over the timing of these estimates, number one. And then two, in the present, in the actuarial process, they're using very conservative, what I refer to as discount rates, interest rates, for the time value of money. And so they're using interest rates of like 2%, which is a very low number. If you think of the interest rates right now, they're probably closer to 5%. So they're taking a very conservative approach, which is okay. However, because of that, you do not want to put yourself in a position to be putting your cash into something that is going to transpire over 20 years. So it's really kind of important when you're looking at some of these funds, there's a lot of nuance. Different funds have different nature, if you will. And so it's very important to keep that in mind when you're looking at some of these funds.
John? So
Yes.
let me ask you, what is the policy on the insurance fund?
So the policy, I don't think there's anything that's really addressed this in the policy
It's
that I
absolutely
can think
stated in
of.
The policy says that we're supposed to have 70%.
With respect to that,
what-
yes,
We're supposed to have 70%
yes,
of claims.
of the liability.
Of the liability.
Yes.
claims, for workers' comp and for the general liability.
Correct.
The other part is what is absolutely going to happen in the insurance fund? What's an expense that's absolutely put to the insurance fund?
So,
That,
and-
no, aside from the claims,
right,
premiums, do we
Sure.
pay the premiums every year?
we do.
Okay.
And we
So if we
charge-
know that we pay the premiums every year,
Yes,
then why wouldn't we not be putting that to the insurance fund and that's an operating expense? And
Mhm.
actually going ahead and putting it under the insurance fund because that's where we pay out of it. So where are we getting the funding? Where does the revenues you have in here actually that there's year-end revenues for the insurance fund and there are year-end expenditures for the year insurance fund?
Correct.
Where do those revenues and expenditures come from?
sure. So the insurance fund is a self-insurance fund in the accounting terms. It's a
No, I
proprietary
asked a
fund.
question. I want to know where the revenues come from to pay for the premiums.
Sure. What we do is we do charges for service
Mm-hmm.
across all other funds and all other departments and divisions. So it's a charges for service. So we have a basis for cost recovery within that fund on there. Those allocation rates that we charge to the other funds, other departments are based on actuarial information that we have. So for example,
I understand that, but my
Mhm.
question is, at the end of the day, where the revenues go from, like, I'm asking very specifically,
Mhm.
we have to pay the premiums every year.
yes,
So are you saying the premiums are embedded in the other departments?
through allocations. Yes, we are
allocations?
charging the other funds and the other departments an allocation to recover the cost of the insurance premiums.
And then when does the money get swept into the insurance fund to then pay for the premiums?
So we do this on a periodic basis. So generally we do this on a quarterly basis. For example, we have the insurance premiums at the beginning of July, right?
Mhm.
And so you can handle this a couple different ways. You can say, well, let's pay this all up front and let's charge all the funds up front, right? And so you're front loading it, which you normally do in all insurances, right?
Right?
So you can take that approach, or you can do it periodically throughout the year in a systematic way. It's six of one, half a dozen of the other. It's really, what your preference is on that. For me, I like to kind of show this in a timely basis. For example, when you're paying the insurance is for the entire year. So from my perspective, I want to allocate that on a quarterly basis. You could argue you could do it up front. You could do it at the end of the year. There's no right or wrong answer on that. It's really depending on different strategies that you're trying to employ with that.
So explain to me, how did we end up in a position where we have nearly a $2 million deficit in the insurance fund?
Sure. So that is solely driven, or primarily, I would say, very high percentage, the 90%, from the actuarial in there. So if you were to look at the audited financial statements for fiscal year 22, you will see the liabilities in there of about $2,297,000. And that is made up between the general liability and the workers' compensation.
I understand that.
on
but
that,
you're-
and that's
but
where
you're
the number is
stating,
driven
John,
from.
You're stating that it's actuarial. The actual beginning fund balances
Yes,
is a deficit. So that's.
based on that,
that's
based on this
beginning
accrual.
fund balances, which is based off of the ACFR, is a deficit. It was a deficit last year as well.
Yes.
So if you look at what happened at end of year, June 2020, sorry.
Yeah.
It was $1.9 million of deficit.
Correct.
That's not actuarial. That's.
That is solely driven from the actuarial reports, period.
That's. Okay, John, let me go. Let me start a different way then. What is our policy on having a balanced budget in the insurance fund?
So before I jump into that, your second question was about the 70% reserve. So if you look at the 70% reserve.
Stop, first of all,
Mhm.
because my actual question was the policy about having a balanced fund. So the way I read, when I walk through the policies, what I read
Mhm.
is that we're supposed to have balanced funds, balanced budgets across all funds, except for the enterprise funds, which are treated differently.
Mhm.
So where is it that we're supposed to be having a negative? I'm not really understanding why we are having a liability. Is it a liability? Is it an actual liability?
It is a liability based on the actuarial study.
So how, okay, 2022,
Yes.
did we pay out the money based on the actuarial study? I mean, we actually paid out more.
No, we
No.
didn't pay out based on the actuarial study.
Okay, so what did we pay out in 2022? This past
Well,
year? What
I
did we actually
don't
pay
have
out?
the audited financials in front of me, but the audited financials clearly show what the expenditures were and what the revenues that we took in for that fund. So off the top of my head, I don't remember what those numbers are, but we can definitely respond to you after this commission meeting with that information.
No, I mean, I actually, I have an issue with the insurance fund, and I am one of the people who's raised concerns with it because it is a significant liability that we have on the books. I'm trying to understand how you're saying that it's just actuarial when it was in the ACFR and that it was actually from 2022 and that we've paid out and that we're actually making a transfer in this year for nearly 1.5 million.
Mhm.
And we're still at a negative balance. The issue, one of my big concerns in this budget, and it's, not an issue with the current administration, is first that the insurance fund started going negative June for the first time. I went back several years in June of 2020. So my big issue is what I keep hearing everybody saying is we have these huge cash reserves. We're in a great cash position. My very real concern is that we're not taking into consideration our liabilities and we're overstating our cash position because of water, which can only be used for water. So this is something I'd like to go over in more detail later, but
Mhm.
I am concerned about the statement that you're making
Yes.
that, oh, well, the insurance fund gets to be negative. I'm not really sure why it hasn't been negative in the past, why up until June 2020, it wasn't negative. And suddenly it's like, it's okay that we leave it in this negative when we know we have to pay premiums every year. And the premiums have gone up significantly
Yes.
every year.
Yes.
That's an operating expenditure.
That is
What
an operating
ultimately funds
expenditure. Yes.
operating expenditures. The general fund ultimately funds operating expenditures. We actually need to be accounting for that. And we actually need to address what's happening in these negative balances. So I understand grants, but I'm actually talking about this is internal service fund. It's an operating fund.
Mhm.
And so, one of the issues that will be coming up later is when we're talking about a structurally balanced budget, we're talking about, will our operating revenues, our ongoing revenues cover our ongoing expenses, separate from capital projects, separate from capital outlays,
And also separate from the internal service insurance fund as well.
but premiums are paid on an annual basis. That is an operating expense.
The premiums are paid on an annual basis. However, the comment about the liability. So I'll use an analogy here. So we also have an unfunded actuarial liability for pension costs that is millions of dollars.
So, okay,
And so we would never.
two separate things.
Well, no. Please let me finish.
Those are two separate things. And I don't want you to confuse the issue by having me let's go talk over here about OPEB. I want to specifically talk about the insurance fund.
So
Right?
I'm talking about what's driving the liability is the actuarial estimates. That is what's driving it.
Do we pay out?
From that, no. So the actuarial liability is breaking out these liabilities into two components. So you've got general liability and you have workers' comp. But within each one of those, in the actuarial reports, they break out the amount that they expect will come due within 12 months And the other half of it is what they expect that's really going to take probably 20 years to pay out. So you don't want to commit cash to something that's 20 years out.
Yet it's in our policy to do so, and it's also in the policy of other cities to do so.
So
So
we,
I'm not
yeah.
sure why you're deciding that we don't want to do that when it's clearly in our financial policies and in the financial policies of other cities to do exactly that, so that you're not suddenly in the desperate situation to go find and scramble for cash. And that's really the way you're supposed to do it. You're
Sure.
supposed to not only have it not a negative balance, but you're supposed to actually have it funded, properly funded.
So
And
Yeah.
give me the justification for really not doing that. I don't understand why you wouldn't do that.
and so the reason why is because, as I mentioned, part of the component of the liabilities are over 20 years. So I would not want to commit cash to something that's going to be spread over 20 years. Why would I want to pay it up front? So from my standpoint, I would
Do-
not advocate
All
for
right, do
that.
you have a breakdown then of what percentage of the liabilities are over 20 years versus what we're expected to pay within the next year?
I do have the numbers for 22, if we want to talk about that right now. I
And
do
also
have
quite,
that. Yeah.
and also quite frankly,
Yeah.
that's not a choice for you to make.
That is
right?
correct. That is
That
correct.
is actually not a choice to be made to say, I wouldn't want to do that if that is actually our policy. And what we actually need to be
Yeah.
doing is actually abiding by policy,
Mhm.
and not just our policy. It's not like these are random policies that have been made up by our city, but that there are other cities that also substantially large cities
Yeah.
that would across, they all have them funded and they
They-
all have these policies in place.
They don't all. Some cities have major outstanding liabilities and negative fund balances in their insurance funds for just this reason.
And some cities are also not financially managed properly. So,
Sure.
so I think one of the things is if we have, my concern is we're saying, well, we wouldn't want to spend this money. However, if we
Mhm.
know that there's the very possibility and the risk that we will have to spend the money, that's why you create a reserve. And that's why you have it in the insurance fund for exactly that purpose.
The insurance fund is not a reserve.
Okay,
The
it's not-
insurance fund,
I
Yeah.
understand that, but
Sure.
you're holding it aside
Mhm.
so that you can actually pay that in the event that the claim comes due, which we've had major claims come due.
Yes.
I'll go ahead. and go.
Sure. So I'm citing last year's report. We're still working on the 23 report on there, and the 22 report.
Your mic.
So for the total liability
Yes.
for 22 from the actuarial studies was $2,297,000 on there. That's broken out between $1,111,000 for the general liability and $1,186,000 for workers' comp. Within those numbers, so for example, we'll talk about the general liability, for example, the $1,111,000. Of that, what is highly probable that will be due in the next 12 months is $440,000. What is highly probable for the workers' comp, which will be due in the next 12 months, is $273,000. So that's $713,000 as opposed to 2.3 million. Now, when I say that, those estimates are based on a 2% discount rate. Right now, interest rates are closer to 5% in there. So it's a very conservative number. These numbers have an inverse relationship to the discount rate. So the higher the discount rate, the lower these numbers go. So these numbers will probably be even less than the numbers that I'm citing, but the actuaries are very conservative, and so they're using a 2% discount rate.
So
Okay.
then-
Good, Brett, that answers your question.
Ask my question. I'd like to do a follow-up on if I can,
Please.
please. The issue that Sheila's bringing up, Mr. bringing up, is that do we, you're talking about over $600,000 here.
Correct.
Within the next 12 months here.
Yes.
Is that funded? Or in other words, how do we show that this is, we're showing is properly funded?
Right. So coming back to the original comment about the reserves and the 70% reserve. So in our fund balance far exceeds the 70%. So if you think of the $2.3 million figure, right, you do the math on 70% on that is whatever, $1.5 million approximately. Our fund balance and our general fund far exceeds that number.
Okay, then why don't we go ahead and move that money from the general fund to the insurance fund? What is,
Sure.
if that is again, the policy,
Right.
then why wouldn't we go ahead and move that? What's the justification?
So during this, these processes, as you said, it's not some unanimous decision where I'm saying, I want to do something or I don't want to do something. So I have discussions with the city manager. We'll have discussions with the commission. We'll have discussions probably even with the council on this. And so strategies for slowly kind of bringing down that liability. And the reason why I frame it that way is, so if the other $1.5 million of the $2.3 million liability is going to really occur over 20 years, then maybe from a cash management standpoint, maybe we amortize it. Maybe we amortize it, and I'm just using it as an example. Maybe we amortize it over 5 years. So every year we add an additional 300,000, and bringing it down rather than immediately consuming our cash right now. But when I say this, these are just strategies to employ for cash management purposes. So these are recommendations. The recommendations coming from me to the commission, to the city manager, to the council in seeking direction.
So, Commissioner Rossi, thank you for service. I do appreciate this. So what you're looking for is for John to make an explicit recommendation that we handle it in that manner versus just presenting it or giving us more clarity about that.
Correct. I mean, look, we have financial policies in place. They're supposed to be adhered to. Right?
Right.
So we're not adhering to the policies at this moment.
So
But hold on. So yes, I would like to go ahead and have you bring your recommendation forward, whatnot, so that we can have a discussion about it. But I am concerned about what I'm seeing in a trend of spending more than we're bringing in from a revenue perspective. And that while we're maintaining these negative balances and then saying, well, we have so much money in the general fund. Well, if that's the case, then we should go ahead and actually fund these while we have so much money so that we actually really have an understanding of how much money we have in the general fund. And I'm not really sure why there's a problem to have those in those funds, because from what I understand, from an investment standpoint, they can still be used for that purpose. So why hold it in the general fund instead of actually funding as we're supposed to do? I mean, the policy number 2 actually says that the funds are supposed to be balanced at an individual fund level. So I don't understand why we're saying it's okay for us to run years of negatives in the multi-millions when our policy states that we're supposed to have it funded and we're supposed to have it balanced. I don't understand why we're saying, well, we don't really need to consider the 70% of claims, which is the policy, because, we have enough money in the general fund. Why aren't we actually just adhering to those policies? And if you want to say, well, this year, the true claim risk this year is this lower number, okay, well, we can have a conversation with that and say, is it really supposed to be all of the liabilities, or is it supposed to be of the current year claims? So, I mean, that's a conversation that we had that can be reasonable,
Yeah.
but saying let's not fund it at all, to
Right.
me, is unreasonable.
So just to speak to that. So the actuarial studies just really started in the last couple of years with this city. So that's why in the last couple of years, all of a sudden you've seen this liability and you've seen probably the deficit fund balance. I can't speak to what was done in the past, obviously. So last year, as of June 30, the auditors reported that there's a $1.9 million deficit fund balance in the insurance fund. We are tracking through, and at the end of the year, we will make recommendations to the the commission, to the council, to the city manager, for what we think should go through. With respect to the policy, yes, if the policy mandates that, then we need to follow that, but we do need to bring it up and have a discussion on that from a cash management standpoint. Period.
And given the level of expenditures and the slim margins to actually us running into a structural deficit where we're actually spending more than we're bringing in, I think that conversation can't wait a year. I think it actually needs to happen earlier because we're in a position, and it's hard for me as I'm looking at, the increase in expenditures and not seeing the increase in revenues keeping pace. It's hard for me to then say, oh, let's go ahead and hold off on that because we have so much money in the general fund. Don't worry that we're going into a deficit spending situation. So I think that conversation needs to be sped up and happen this year's budget. I don't understand the reason for delaying it till next year.
So let's be clear about this. We're talking about budget versus spending. So they're two different things.
But the budget
On there.
controls the spending.
So no, please let me finish. So we're going through the year, the current year, and we'll be doing all of our accounting. We'll, at the end of the year, we'll be looking at our results. We'll be looking at all of our fund balances, and we'll be going through all of them, doing normal due diligence as is done every year, according to the auditors. So when we get to that point where we have final numbers, that is the point for some of those conversations in terms of strategy and how you want to handle certain things.
But we have the numbers from last year.
We do have the numbers from last year. You're
And
absolutely right.
we have the actual numbers from last year.
That is
So
correct.
I don't see any reason to wait on that. I think it's irresponsible to move forward on a budget without having these other conversations and just saying we'll deal with it next year.
So the
Go
request is, what is the request? Mr. Ross?
I'd like to have, prior to passing this budget, I'd actually like to have this understood and explained. And then one of the things I did ask for and I didn't receive was a breakdown on the funds. Because I've heard repeatedly, oh, well, we have negative balances due to grants. So it's like, all right, I'll take out the grants, but I want to have a real understanding of what our true liabilities are in the other funds. Because per policy number 2, we're not supposed to just balance the general fund balance, which everyone's paid attention to. We're also supposed to balance the other funds that are not the enterprise funds. I can understand grants, timing issue. Let's take those off the table. But in enterprise funds, self-supporting. But the real question is, what are our true liabilities in the other funds? Because ultimately those funds are funded by the general fund, right? There are.
Chair, may I interject for just a moment? I definitely appreciate the discussion that's taking place, but I would like to give Interim Director Downs an opportunity to present the budget presentation that we have for you this evening. And I believe as given the opportunity to provide the presentation, some of the discussion that's happening now would be better suited to have once he's completed his presentation. And at that point, the commission could go into discussion mode and I'm taking notes and we're taking all of the input, but I think it's important for us to have an opportunity to present the budget presentation, as it sounds like we're getting into a lot of specific discussion without having the opportunity to hear the presentation. Just a suggestion for the commission.
John, the question has been raised. We're asking. The question is, say one more time.
Well,
All clear. Giving John direction.
I would like to have a detailed discussion on the funds and actually on the fund liabilities, specifically looking at the insurance fund and having an understanding of what our true liabilities are in the insurance fund, and then having a breakdown of what's current year claims versus what we think is projected claims.
Okay, and John, can we revisit this question at the end of the evening to determine if anything has been, any clarity has been offered? And if there's still remaining good questions, could you make a commitment to get back to us so that we can have the.
Yeah, so any of the questions from tonight, we can include in agendize for the next Finance Commission meeting.
Fine, that is scheduled for the end of June, right, the 29th?
The last June meeting will be canceled. Our next regular meeting is in August.
So that's my concern, is that this is going to go to the city council next. And we haven't had these answered, and we've had multiple meetings also canceled. So my concern is that there are some deep questions that we need to have discussed. And if the next meeting's canceled and the next one is for the city council to pass, I have a problem with that. And
So is there a question, is there a recommendation by the council, Commissioner Department to, schedule another meeting to resolve this issue? And before we go to city council with the recommendation. Question for the council.
So Chair, I just wanted to so I think that the city council I think it's on the agenda for June 7th.
Yes.
If the finance commission, I mean, part of the question at this city council meeting will be whether the finance commission supports this budget, right? And I think if there's some serious concerns, then I can't speak for the council, but I think the council might say, we need you to come back to us. But I do think the other thing, that the time pressure is trying to get the budget passed before the end of June.
Yes.
So I think we do have a little bit of time, because there's another council meeting, June
21st, I believe.
21st. So I think if this happens tonight, if we get to that conclusion, I think I would suggest perhaps the Finance Commission schedule a meeting between the 7th and the 21st, so we can answer these questions, so that if the city council decides to defer approval on the budget on June 7th, that the issues that remain can hopefully be worked out between the 7th and the 21st.
I think that's a wise suggestion. Let's do this. Let's go through the presentation, John. If the questions remain and they're substantive, and we need to get together again, then the commission will
Reconvene.
review calendars and let's set this,
Absolutely.
thank you, Mr. Rossi. Thank you, Fred. Appreciate it. And John, thank you for fielding those questions and for taking focus. Can we get started on the formal presentation, or are there any further questions for the comments that were made by John to begin the meeting? Let's start. Okay, John, you're on.
Well, thank you. Okay, so we're going to start discussing the 24 budget. And the first thing I want to discuss in here is, in this budget, let's see if this works. Stephanie, I don't think this remote is.
Is it on? Point it here.
So within the budget, this year, I don't think it's.
Were you a manual second?
Yeah, I don't think it's so within this budget, this was really the first year we took this approach where we really did a zero-based budget. So what that really means is we built this budget from the ground up. We didn't look at prior years. We didn't look at prior year numbers and say we're going to take some inflationary factor with it and adjust these numbers to some factor. This was also a very collaborative effort with all of our departments. We had significant community engagement. We have continuing cleanup efforts. And we've also have unanticipated responsibilities that we need to address. Next slide, please. So with respect to the community engagement, we had our commission meeting last May 16th, where we presented our first draft of the budget to the Finance Commission. Following that, we had two subsequent community engagement meetings on May 18th, one in the morning and one in the evening. We then held a budget workshop on May 30th with the City Council going over the overall budget. And we are planning to present the budget June 7th, including a public hearing for adoption. Next slide. The community engagement component of this, so we had an online survey regarding the budget that was held between March 29th and April 28th. We had 152 responses. The survey is available on the city's website, the mobile app, social media newsletters, and then also this, excuse me, the QR code here. Next slide. The position requests that we had, it was a very collaborative process. The entire budget was very collaborative this year. And so with that said, that meant working with management and human resources and finance to really go through all of the positions. We created a position control report, which is the first time that we've had that here. We've transitioned some of the key temporary positions to permanent positions on there. And one of the purposes of that is we want to retain institutional knowledge. If you have contractors and you have temps, they're going to come and go. You don't have any institutional knowledge there. We're trying to return staffing to pre-pandemic levels and improve the service levels. You know, for example, 4 or 5 years ago, the finance department was decimated. Some of the other departments were decimated. And so we're trying to rebuild all the departments, basically. Next slide. This schedule here is a list of the one-time adjustments, not adjustments, the one-time expenditures that we're anticipating for next year that we're requesting within our budget appropriations. And a couple of things I want to point out within here. The lion's share of this is really within community development, and it has to do with the housing element. So you'll see in here, you'll see the community development, except for the very last line in there, the 151,000, the rest of that totals up to about $973,000 there, or 973,000, yeah. Then we have a couple of other things in here. For example, we want to get a new permitting system in here in place, and a few other things in here. And the reason why I want to point this out is, again, because the focus on structural problems. So we've actually really have reduced the appropriations to get them much closer in line with our revenues. And that's a normal process. So when we go through the budget development process, we're first running these numbers, we're looking at these at high levels, and we're looking at our revenues, we're looking at our expenditures, and then we're starting to really do heavy analysis on there to look for problems, to address shortfalls, to figure out ways to reduce appropriations and things of that nature. Next slide. So one of the things that we also want to, yes.
Per our request from our last meeting, there's nothing that changed. These numbers are the same you presented to us.
That is correct for the one time. Yes. So this schedule here, what we're doing now is we want to show how the budget document changed from its initial publication at the beginning of May to where we are today. And so in here, you'll see in here, for example, adjustments in our projections for the general fund that occurred from May 4th to the 16th. And then from the 16th to where we are today on there. And then underneath it, you're going to see the same thing with adjustments to our budgeted revenues or our estimates for 24 in here. And this is at a high level summary. And if you go to the next page, what we start doing is breaking down those numbers so that you have details on what the composition of those adjustments are. And so with that said, these are still at a higher level. We also have, as part of your attachments in here, then we have the details that flow into these numbers. So if you really want to get into the weeds and look at the details, those schedules are there that support these numbers. So in the with the revenues for 23, the predominant adjustment had to do with property tax, and it was over secured and unsecured property taxes. And so we had a net increase in what we're estimating for 23 of 333,000. And then you'll see in the draft going from the 16th to today, we have some slight adjustments downwards on that. And again, because we got some updated estimates from our sales tax and our property tax consultant. And so we make fine tunings on that. And that's what that represents there.
Can I ask a quick question?
Yeah.
I'm having a little bit trouble following. So what you presented to the city council on Tuesday, was that different than what we were given last Thursday?
The budget has changed. Absolutely.
So I think one of the challenges is that I'm not really sure why we didn't receive the updated budget that was presented to the city council at the same time the city council did. Because for me personally, like I went through, input all of the numbers since
Mhm.
you won't give that to me in Excel. And so it's frustrating that then we received this yesterday that doesn't provide us with enough time to even review where
So
the
it-
city
it is-
council got something.
So I misspoke. It is the same, number one. Also, what we've done, so remember, these are draft documents. They're constantly evolving for every time we meet. And so because of that, we have detailed schedules and we have support schedules. These schedules here are to track those changes, and that's what they are doing. They are tracking these changes.
The reason I ask is, okay, hold on a second. The reason I ask is that it's not in line with what I input. And I input it straight from the document. So I'm confused why what is presenting this. I was like, did you present something different to the city council than what we received on Thursday?
So what you receive and what the council receive is one and the same thing.
Okay,
on there.
Thursday,
So that's one aspect of this. The other is every time we make changes, we provide detailed schedules of what those changes are. So this is the high level of those changes.
Mhm.
And then you have, as an insert in here, then you have all the detailed composition of those changes. So we track every change that is made throughout the document.
okay, I will look at it. I'll confirm. Thank you.
Okay.
John, thank
Okay, so, and then on the 24 revenues, so, the revenues really didn't change between the beginning of May and through the 16th. We've made some changes going from the 16th through the 30th. One of them is just slight adjustments. $133,000 really just has to do with adjustments to the sales tax. The other component of this is because, if you recall from our, May 16th meeting, we removed the transfers out of this. And so what you're seeing there is the 18.8 is really the net of the transfers that are being moved.
John, you're on slide 9.
I am on slide 7. Stephanie, can you,
That's not on the screen.
yeah, can you move that along? So there's 7 there. So-
Sorry, John, excuse me. Hello, Council, Finance Commission. This is Tamara Benz, Assistant to the City Manager. Just a reminder, if you can all speak into your mics, because we have staff that are watching online and they're unable to hear if your mics aren't on. Thank you so much.
Thank you.
Sorry about that. So what you'll notice here is you'll see the change in the revenue between the 16th and the 30th, that 18 million. And what that really is those are the transfers. If you recall in our May 16th meeting that we were going to remove the transfers out of the revenues. Next slide. So I want to jump to slide 9, Stephanie. So in the bottom here, what I want to point out is this is the reconciliation of what that $18 million change is. So the first 4 items there are increases in revenues. The last item is actually the transfers being pulled out. The net change there is the 18.8 in there. So again, with us, we're all about, with the transparency and being really forthright with this and reflecting all the changes in all of our schedules. If you could go back now to slide 8, please. So here, as we mentioned, for our first change in the, going from the May 4th to the May 16th, you'll see that we had a net increase of 333,000 in our 23 projections. And if you go back over to slide 8 now, Stephanie. Okay, I'm sorry. This is the breakdown of what that $333,000 adjustment is. And it's an increase in the projected estimates for 23, and it's broken down between secured and unsecured property tax. The next area here is with respect to when it changed from the 16th to the 30th, you'll see a slight decrease in there. And this is the breakdown of that. And this had to do with updates with our sales tax. We had a few days after that, we had a sales tax meeting with our consultants, and we had updated numbers. And so we're just constantly keeping things current. And so those were the adjustments for that. Go to the next slide, please. So here, this is within respect to the revenues for 24, these are the adjustments that occurred during the going from the 16th to the 30th. And again, you're seeing $133,000 there. And you will see in here some further adjustments on our taxes. Let's see here. Now let's go to the next slide. Let's see here. Now, these are changes to the expenditures. So the first area here, you're going to see the changes from May 4th to the 16th. And you're going to see that we had some adjustments of about 139,000 that occurred between the 4th and the 16th. And we, on page 11 or slide 11, you will see here's the composition of those adjustments there. And these are the adjustments by department. The inserts that we have within the document have all the individual breakdowns that roll up to these departmental numbers on there. Go back, please, to slide 10. So now moving on to, and then we made no more changes to the projections from the 16th to the 30th. And then down below that, here are our changes to our estimates for the 23-24 fiscal year. And you'll see in here the changes for the general fund between May 4th and the 16th. You're going to see change where we actually decreased our appropriations by approximately $253,000. And if you go to slide 13, you will see the composition of those adjustments by department. Sulie, if you can go back to slide 10. So now looking at going from the 16th to the 30th with the general fund, you'll see we have an additional $505,000 of reductions in appropriations. And if you would go to Sulie, slide 15. And here are those adjustments by department. And as I mentioned before, in your inserts, you have details on the composition of all of these departmental changes. And then please go back to, I believe it is slide 10. And now on all the other funds that changes between the 16th and the 30th, you're going to see we had an additional net adjustment of $67,000. And that is reflected on slide 18. So here's the breakdown of those adjustments in here. And then from there, let's see here. Now, so you'll see in here, so please go back to slide 11 for a minute. So during the projections for 23, we had adjustments, we had decreases in the city manager's office of 152,000. They were primarily related to personnel changes. We had $292,000 of increases in management services. basically we're reallocating between city manager and management services. We had a decrease of 1.5 million in finance. And that's primarily because it's really related to transfers. And then we also made some adjustments to our appropriation estimates. In community services, we had increases of 57,000, and those were really related to updating our estimates. In public works, we had increases of 68,000, and those were due to truing up costs in there. We also had within the general fund reserve, we adjusted that for $40,000. And then in the miscellaneous transfers, we basically removed the transfers out of the expenditures in there, as we had also done with the revenues. Go to slide 12, please.
John, pardon me.
Yeah.
I may be the only one. Pardon me, I may be the only one that's confused in this moment. In the packet, it looks like slide 15 and slide 16 are the same.
Yes, and you're correct in one sense. And the reason for that is we wanted to show the numbers. We wanted to bullet point all the changes, and because we couldn't fit them all onto one page, we put them
It's
into
spilled
2
over to the next
pages.
page.
So it's really the same, it's the same information, but it's continuing of the summary of
Thank you.
adjustments in there.
Thank you.
It's an absolute valid point
Yep.
on there. Okay,
John, I have a quick question. You mentioned
Yeah.
from the finance, you removed transfers of almost 1.5. What were those transfers?
so the transfers, they were classified in the expenditure section, and they're not expenditures. Transfers are neither revenues nor expenditures. They're sources and uses of funds. They are not revenues or expenditures. Let's see. Get there.
Question?
Let's see, where is
I'm
my-
actually just kind of confused why, I'm just going back historically, they've always been in there. If,
And that's really in error. They should not have been. They should never have been. So that's really, quite frankly, an error.
for like 15 years?
Well, yes,
Okay.
they should never be in there. If you look at your audited financial statements, you will never see transfers included with revenues nor expenditures. They are sources and uses of funds. They are separate to themselves.
With audited financial statements are
Yes,
done differently than the budget. Right, so. Okay. It's making, because there have been so many changes made across this budget. It's hard to follow.
so,
And I think
sure.
that's one of the challenges is that it really, there's an issue when you like look at a budget as a one-time thing versus going backwards and forward and really, and looking at trending. So it's hard to follow with so many of the changes. And that's.
Sure, it's a valid point.
And
And
Yeah.
changes sometimes need to be made. I'm just struggling on this.
Well, one of the suggestions I would offer up on a go-forward basis is really having, sometimes one-on-ones with the commissioners and going over some of the reports and things to walk them through when necessary or when they have questions on something like that. So South Pasadena is not alone where they've had bad practices. And so I'm really going forward with best practices, and you never include transfers with revenues nor expenditures.
thanks, John.
So I just want to interject here really
Mhm.
quickly. I do think that we can improve the budgeting process for next year. And I'm not even sure this commission saw the May 4th budget. So that was going to be one of my thoughts, because that was I don't know. So they
Yes.
may not even know the difference between the 4th and the 16th, because it's possible that you only saw the 16th budget.
And that is a correct statement.
Yeah.
Yep.
So, so I think there's room for improvement here. And I think also there's a sensitivity from, not this administration, but I think it was in 2020 where a budget was presented to a finance commission and then a different budget was presented to a city council and approved. So there's there's some historical sensitivity to sort of tracking the budgets and what version we're on. I just
And-
wanted to note that.
Yes, and to clarify, the May 4th, that was when we first launched our budget process. And we met individually with each council member with a very preliminary draft budget. That was our opportunity to have dialogue with each council member. And I do think valid points are being made tonight, and we are taking all of the feedback we're receiving. We did want to make sure we tracked every change that was made, and that's the reason why Mr. Downs is going through line item by line item, because we don't want the commission not to have that information. So we want to make sure you see all of the changes, because I think that was actually a comment made at the last commission meeting where the commissioners were asking if all of it could be tracked and if staff can bring back those track changes. So that's what we're attempting to do. But the May 4th was specific to our initial launch of the budget with each council member.
Very good point, and thank you. We did make that request. And John, perfect example of no good deed goes unpunished, okay? And we're trying to follow you, okay? Thank you.
I just have
I am Irish Catholic, so I'm used to the abuse.
I just have one quick follow-up on what Commissioner Rossi was saying. I really appreciate the detail. Like, we had like budgets before they got changed and there was no explanation and there was no detail. Now we have the detail, but if we're making kind of a significant policy change or in our accounting practice, might be helpful to kind of like flag that. So I
Sure.
saw that the removal of the transfer, and I'm like, that must mean something more than just, a number that's being moved out of there. And so,
Right. So one of the things I kind of want to point out, so in your budget binders, something in there that will kind of help you with that. On page 20, excuse me. So on page 23, you will see in the budget document, you're going to see some columns and you're going to see beginning fund balances. You're going to see revenues, expenditures, transfers in, transfers out, adjustments to reserves, ending fund balances. So just trying to make this very clear cut how the flow is going through. And so with that said, for example, in this case with the 4,089,000 transfer, you will see on page 23 and the page 23 and I believe page 25 are the summary levels of all of the funds. And that's where you're going to see these numbers in here. So with respect to the 4 million or 1,489,000, you will see that reflected in the transfer section of this.
So now, one of the things that happened in prior budgets that was changed as well in this, and looking specifically at page 26, is that the general fund and the undesignated and designated reserves were
Yes.
actually totaled. So right now you have them as individual line items and not actually having them totaling them up. And they used to have the reserve balance information was also directly kind of in that fund balance thing. So it actually now has me like going to two different places, but it's,
So on the summary schedules, it's just that it's summary. So here's the summary changes in the fund balance. And then the subsequent schedule shows you the detail of what the composition of those changes are. So for example, as you're citing in there, on page 25 is the 24 budget. And you'll see in over towards the right, you'll see reserve adjustments in there, for example. And so the reserves are obviously an inverse relationship to the fund balance. If you're decreasing the reserve, that's flowing into the fund balance, and so the fund balance is increasing. It's always an inverse relationship. So you'll see in there that we've adjusted the 500,000, for example, and then on page 26, we're showing you here's the composition of that change. And so with respect to the reserves, we're always referring to them as we're having additions or deletions to these reserves. So it's reflecting the changes within those reserves.
right. But what I'm saying is actually in past budgets, what they would do is subtotal that. So you could see general fund, undesignated and designated reserves together was equal to 22 million. So instead of then we separating out and saying this is what's in the undesignated, don't pay attention to the designated, but like, it's just was a clearer way to look at it because they really are both under the general fund. So just a note, because there was this change made in the way this was presented.
I can answer that. Actually, there was quite a bit of discussion on that issue last year during the budget process. And the way we're presenting it was based on the feedback we received from council last year. If the commission has recommendations, if you want things to look differently or presented differently, this would be the time where you can share that input with us. But last year during the budget process, I recall quite a bit of discussion at the council level on how they wanted things to be represented. So if the commission has a different idea, this would be the time where you can share that with staff and we will take your input.
Okay, so I just wanted to point that out with respect to the transfers on there. So now let's see, that was on slide 11. So Stephanie, if you would move on to slide 12. And so this was on the changes in the 22-23 expenditures going from draft 1 to draft 2. And one of them I want to point out here, you'll see this 4.7 million. That was just simply an error. There was a transposition error when one of the departments was entering their numbers. They entered in 6 million instead of 600,000. That's really why you're seeing such a huge adjustment in there. It was really a correction, period, on there. And again, in the detail schedules, all of this is laid out. Every single adjustment that has been made from each iteration is reflected in those schedules. So the next slide, please. Let's see, what is that one? Okay, so here, going from, we also had in the change in the 24 expenditures, going from draft 1 to draft 2, we had $253,000 of adjustments, and they're basically decreases in the appropriations. And you're going to see it broken down, as I mentioned before, by department. So again, you're seeing management services. They had an increase of 15,000, and that was to make adjustments to their contract services and personnel. Community development had an increase of 10,000. That was related to advertising. Community services had an increase of basically $2,500. That was just simply an adjustment on personnel. Finance had an increase of 71,000, and that was related to our OPEB actuarial services. In there, fire had an increase of 50,000, and that was related to adjustments to the San Marino contract services. Next slide.
And John, just to sort of remind, the convention did not see draft 1. So
Sure.
they-
And you know, to speak to that, so I weighed whether reflecting draft 1 to draft 2, but I wanted to be, you know, fully transparent. So I wanted to reflect all changes that have occurred from that point. And that is the reason why you're seeing it this way. So I, you know, to be honest with you, I went back and forth whether to reflect that or not, but under, you know, I just wanted to be, you know, full disclosure on this. And so I wanted to reflect draft 1 changes as well. But I do understand the following of it. Okay, so now on to slide 15. So here are the changes going from draft 2 to draft 3, and to speak to Councilmember Braun's comment, this is from where you last saw the document to where it is today on there. And you'll see, so there was slight adjustments downwards with the city manager. That was just simply related to personnel. Community development had slight adjustments upwards on there related to personnel, and also removing a parking permit vending machine. Community services had a decrease of 10,000. And again, that was related to personnel, and also removing some replacement of a refrigerator and a microwave oven and some other oddball things. Finance had a slight decrease of just under 4,000 related to personnel. Next slide. This is a continuation, Chairman, on the same thing. It's just to lay out all the bullet points up to that $505,000 adjustment. So in fire, we had $53,000 decrease, and again, related to personnel. Library, we had an increase of $5,700 related to personnel. Management services, we had an increase of $93,000. That was primarily updating of personnel, also a city hall security contract, and also some costs related to some services to for codification purposes of the Muni Code.
John, when you say updated personnel, what does that mean?
Sure. So with respect to the personnel, we one of the things that we did is we looked at all of our personnel costs and we looked at all of our vacancies. And so we met with management services and all the departments, and we went through all those vacant positions and took the view, when are these positions really going to be filled? And so a lot of these positions, we're not going to fully budget for a year because, for example, I'm going to use public safety police in particular. Hiring sworn officers is incredibly difficult. We'll be lucky to hire a small percentage of the vacancies that exist right now. A few days ago, City of LA just announced that they're going to be recruiting for something, was it 1,000 officers? So we're competing with that. It is so hard hiring sworn officers. So we went through that analysis and we thought, what's realistic? What is really going to happen here? And so we went through that exercise with this. So there's an issue there regarding the vacancies and prorating when the hiring was going to take place. And then there were slight adjustments on the salaries and things like that. And so some of them you'll see slight increases, but the bulk of it is really decreases. And it's because of the adjustments on the vacant positions.
However, in that case, aren't we understating what our future liabilities are going to be in terms of salaries and wages?
So I would never refer to it as understating. We're budgeting to what we believe is going to take place in 24. So I would never use the term understate, number one. But with respect to going future costs related to those. So if you think of any city, every city always has vacancies. You have vacancies going on, you're hiring people, you have vacancies that exist, you have retired people that are retiring out. So there is never really a state when the city will be all of our positions fully filled. You will never see that. You will always have some vacancy factor that's going on with that. Many cities, they do what they refer to as a vacancy factor. And so they literally have a line in their budgets where you're going to see this credit adjustment for that. I don't like taking that approach. I rather would look directly at the positions and know when they're going to be filled and cost them accordingly.
But you can't say for certainty when any of the positions are going to be filled, but ultimately when you take on staff, you're not taking them on only for the single year, you're taking them on for multiple years. So if we have a certain percentage of revenue and we're growing only at a small percent because majority of our revenue is tied to property taxes, to be responsible in the hiring process, you have to really consider, will we be able to sustain those hires in the future? And I think that's my big concern with this approach, because while it helps balance the budget in this year, it's not really a sustainable approach. And then what we'll see next year is suddenly an increase in expenditures that exceeds anything related to, salary increases through, like, we're looking at contractual, like doing an analysis, we're looking at, whatever's done with the unions and negotiations.
Right.
So all of a sudden you're going to see a significant increase. And I think that's my concern in that approach of doing it that way.
I understand your concern, but how would we address your concern in today's budget?
I think you have to budget for the full, as though they're there for the full year. Of course, I mean, every single budget always is saying like, this is the cost of the FTE. And that's what that cost is going to be. You don't say, well, it's going to be a 10%. You know, you don't adjust it that way. You don't say, well, for 90%, because we're not going to hire them the first month. It's going to take a while. Every budget's going to take a while.
Commissioner Rossi, that's actually not the approach we should be taking because we do have a very clear sense of all of the positions that are being requested, the timing and the priorities of each of those positions. Now, it's also important to keep in mind moving forward, we know, I can just share with you, our directive for staff next year organizationally is going to be, we're not adding any positions unless it's a life and death situation and we need a position. The positions you're seeing as part of the budget process now, those are really for the most part taking us to our pre-pandemic staffing levels. So in the last 3 years, we've made up that difference by hiring contractual and temporary staff. So all we're doing now is really looking at workload and capacity and adjusting for positions that we really do need as an organization to be able to function. But we do know exactly the timing of when those positions are going to be recruited for. I think that's what John was alluding to. We've met as an executive team and gone through every position and looked at the timing, looked at the need, looked at the recruitment patterns. He mentioned public safety as a great example. We know for a fact we're going to have a very difficult time recruiting for those positions.
I understand that, but the one factor that has to also be considered is, will the revenues coming in this future year be able to actually cover the expenses? And that, because that is actually a requirement, that your operating revenues coming in will be able to cover the operating expenses, particularly wages. Because the other scenario that happens is all of a sudden you find yourself in a position where you're having to fire staff because you didn't plan for that level. And, when I look at my analysis, the last year there's an overstatement or over expectation was 8% for revenues. The revenues grew 6%, but the expenses grew more. So, and that's where said you have 6% increase in revenues, but an 11% increase in expenditures. That's something that we have to start thinking about because it's kind of happened a little bit year over year. And I'm really looking at ongoing revenues, ongoing expenditures, because what I don't want to see is people can't get the raises that they need to get. And, as you're about to go through.
So that's included. I mean, just for point of clarification, we're currently in a 3-year MOU cycle. All of the increases that are part of the MOUs have all been accounted for in our budget process.
But in this document, it also talks about a contract to go ahead and evaluate all of the salaries to bring them in line.
That's
Right.
going to be a more comprehensive study that we need to do as an organization because we have classifications that are no longer meeting the industry standards.
Right.
So-
But stop for a second. So if you think about it, if you're already operating on super slim margins, you want to increase the staffing levels and then come back next year and say, we need to bring it up to industry standards. I'm asking, where does the revenue come in to pay for that? So I would rather see bringing it up to industry standards with whatever staffing level that's appropriate before saying we need to bump up the staffing and then go, oops.
So we have also done that. We have also done that. So we had a number of positions recently that went to council where those positions were more than 12% below market.
Mhm.
Those positions were adjusted, their salaries were adjusted, and that is incorporated in the budget you are reviewing.
But then you have in this budget document, a request for additional money to do a deeper analysis.
Which the city has needed to do for several years now.
No, I understand that. That's not my point. My point is that the expectation is that there'll be a lot more positions that come up saying that we need to bring them to market.
Potentially. Your point is well taken. And I think we will address, I think what we're doing for the purposes of the next year's budget, we have presented you with a realistic picture of what the positions are, the timing of those positions. Now, whether or not the commission wishes to advise us to do something differently, that's really up to you as a commission. And ultimately, those decisions there may be policy decisions involved that council may have to make. So that's the purpose for tonight, is to get all of your feedback.
Yeah, no,
Thank you.
absolutely.
Thank you.
The other thing I'd like to point out with this, so your point is well taken. However, we're here to adopt the annual budget. These are the numbers for the annual budget.
Yeah. So John, may I suggest, and Janet, may I ask you to do this, when this is finally presented to the city council, can we put an asterisk next to that and bring Commissioner Rossi's concerns to the table. Because when we are fully staffed, and God bless us when we are, hopefully someday soon, the budget will have a huge increase that Commissioner Rossi is suggesting. So I think we need to make them aware of that.
I think that's a good point. I mean, I think, the last call it 3 or 4 years, right? I mean, I think one of my issues, honestly, is it's hard to know what the appropriate staffing level is. It's been such a tumultuous time over the last 3 or 4 years. We've hired 50 people, I think, in the last year or two, just to bring, I know when I was on the planning commission, we had an interim planning director and 2 interns at one time. That's where it was about 3 years ago. There was 3 people. I mean, but I totally understand this discussion. It's really great we're having this discussion because I think I'm not sure any of us really know what's the right staffing level. And to Commissioner Rossi's point, and what can we afford? So I think that's really the question. And I think we probably need to start keeping an eye on headcount.
Yep.
But anyway, thank you.
Thank you. And again, we'll ask you to take that to council, make sure that they're aware of that.
Yes, thank you. I will do that.
We have another question?
Yeah, quick follow-up question on the police department decrease. So I just want to make sure I'm understanding this correctly, that decrease was based on an expectation of how difficult it would be to recruit people to fill certain positions.
So the process there was an analysis between myself, the management services director, and the chief of police, and going through all of the positions and looking at realistically when these positions would likely be filled, given the difficulties of hiring public safety or sworn officers.
Okay, so
In the competition we're facing with the city of Los Angeles.
Yes, and other
And other
cities.
agencies who are also offering significant sign-on bonuses. There's agencies offering up to $40,000 per person signing up or referral. I did just a quick point. I want to make sure you all know that all the comments that we are receiving tonight will be actually taken to council. So our goal is that between now and next Tuesday night, because the agenda is posting as we speak, but between now and next Tuesday, based on the feedback we received tonight, we will be doing an additional document to the city council agenda to add the discussion that's being raised this evening and the points that the commission's making. So I just want to make sure for the record, all of that information will be transmitted to council.
Thank you. Thank you very much. And I'm sure that was a reaction to my plea to Janet to take that forward. But I felt like that was so important, Janet, that that was an extra plea.
I just have a quick
Yeah,
follow-up on that. So we're estimating difficulty in recruiting, but we're not stopping recruiting. We're still recruiting for these positions. So I guess my final question would be, if we do get people to fill these positions sooner than we expected, is that accounted for in the budget, or will we need to do a different?
Those would be
budget?
mid-year adjustments we would make. To give you an example, specifically on public safety, we spent the last 9 months attempting to recruit for a deputy police chief. We actually also hired a recruiting firm. It yielded 0 candidates. So we're now back to square one in trying to re-strategize on how we're going to go back out. And as far as officers are concerned, we've had open recruitments for the last 3 years, maybe. And we are not attracting any candidates. Now we're trying to come up with alternative strategies of how we can move forward. We're not alone in this initiative. Every city is facing the same challenges, and actually not just in the state of California, but nationally. There's a huge, as you all know, there's just a lot of issues associated with public safety now. So we would be very happy if we're able to adjust those numbers to reflect hiring of additional officers.
I think I would prefer to see a budget that reflects I mean, I know that there's a realistic outlook, but there's also, we want to fill this position and we need, this amount to fill this position. And I'd rather see the budget reflect us anticipating that position will be filled in the original budget, including the total amount, rather than coming back later with a mid-year budget. That would just be my preference. I think that'd be the more.
Sure. But
transparent
keep
way.
in mind, this is based on realistic scenarios. So this is not something to solely for the purpose of balancing a budget or to come up with a number. This is what is really likely going to happen. The probability of this is very high.
John, I hope
and
you're correct.
also, may I
Yes,
say that
please.
if you start changing the salaries, the wages number, then you've got to start looking at the overtime. Because
That
if
is
you're-
correct.
If you're fully employed, fully staffed, then you're not going to have as much overtime. So you've got.
Yeah, it's an inverse
Both.
relationship.
It
Yeah.
is, absolutely. Yes,
Finance Commission, good evening. Louis Frosto, Management Services Director. I just want to add a little more context to the conversation that's happening now around how we went through the analysis to determine the actual date in which we think we're going to fill a position. So it was quite the journey in doing that, but we actually looked at where each recruitment was in reality. So where we are in the process. And what we found was, particularly for the public safety positions, a lot of them were still in the written test phase. And when you consider the process and the background process, it's a 4-month process, 4 to 6 months. We knew that we could not possibly fill it before September. And so the calculations that we did were actually pretty conservative in the way that we didn't put it out too far if we knew there was a chance that it would be filled earlier. And then that's the case for all of the positions. We currently have 44 active recruitments. Thanks, I appreciate that. Yeah.
let me clarify something. You're suggesting that if we had the perfect candidate today, it would take 4 months before he or she would actually get an offer. Am I correct?
That's correct. Well, conditional offer, yes.
I'm depressed.
Sure. I can speak to a little bit of the police hiring process.
No,
Oh,
please.
okay.
No, I'm not
All right.
questioning the process. No, I
Sure.
appreciate the fact that you're very careful, but that is
Yes.
it's
It's a sad reality.
It is a sad reality. Okay, thank you.
Thank you.
So, wait, so I'm going to ask a question then. So if we had the perfect candidate today and you're projecting that it would take 4 months to hire them, then are all of the salary numbers off by 30%?
So we took the estimated hiring date
Mhm.
into consideration when developing, or John did when developing these numbers. So that was factored in.
Right, but like we aren't seeing what those factors are. So I'm trying to understand what this real salary increase that we'll be taking on is going to be after this year for those exact same positions. Right. And so, I'll be honest, I mean, one of the reasons I am kind of grinding on this point is because we don't have the revenue forecast for the 3 to 5 year revenue forecast and the expenditure forecast ahead of making these decisions. And I do, I don't want to say no for any of these positions. And I definitely don't believe in micromanaging the situation, but there is also the option of prioritizing positions and then saying, we're going to do the revenue forecast and the expense forecast and come back to be able to do appropriations mid-year when we have those in. I mean, that is a possibility to do. So I think that's where my discomfort is. We've struggled to have an understanding of the past and we're struggling to have an understanding of the future. And really, I just don't want to fire people. I don't want to see that happening. Like once you take them on, I think and I want to see people be able to get the raises that they deserve to get. So that's where I'm coming from.
You want our city to be great.
Yeah, I want our city to be great.
Point taken, Commissioner. I also, in looking at, so not all positions are in like 4-month mark. There are some positions where we're in the final stages of the recruitment.
Yeah.
So rather than
Said that.
July, it might be August. So that 30% factor is for some of the public safety positions, not all of them. There are some police officers that are in a different recruitment cycle and are earlier. It just varies, but your point is well taken.
And that's all built into the number that John has given us. right?
That's correct.
Perfect.
The other thing I want to
Not-
address for Commissioner Rossi
Sorry.
on this, it's a very valid point. We are going into the next few months, we will be putting together 5-year projections, models with assumptions for how revenues are going to change, how cost structures are going to change. Particularly, you have personnel, you have material operations and materials, you have contract services, you have professional service agreements. So in the 5-year model that we will build out, we will be breaking it down into those kind of those types of cost types, if you will, how they're going, what are expectations of how they're going to change over the next 5 years. And so the adopted budget for 24 will be year 1 of that 5-year forecast.
John, I do want to add one more point. I think this is important. As I'm hearing all of the feedback from council, from commission, some of it actually mirrors some of the feedback we've already heard from council as well. So it's great to know that the commission and the council are in sync. We are also going to be bringing on a senior level financial advisor in the next few months because we want to start doing more of the long-term financial planning and looking at different financing sources, looking at our investments, just looking at our entire financial portfolio. So I think the comments you're making tonight are very much in line with some of the plans we have in an effort to make sure that our budget, because one of the biggest criticisms the city's had in the last several years has been not delivering the budget on time. And as recently as 2 years ago, we went on, I think, for 2 years without an adopted budget. So in an effort to make sure we're not doing that and we are staying on track and staying on schedule and making sure we do have an adopted budget by the beginning of the fiscal year, there are things we'd like to do, and those things will be done. The Finance Commission will be very involved in that process. You'll have the opportunity to review, assess, comment, provide feedback to council. And frankly, we don't want this to be something we just do one time. I think this needs to be an ongoing discussion as we work together to get our entire finance department and our operations back on track.
And what I think you hear is we appreciate the fact that we appreciate the steps that have been taken. And John, we appreciate the work that's gone into this. I for one appreciate the detail and the detail around changes. What I think you're also hearing is we're pleading for helping us to make good decisions in the future by giving us the additional data that we need. And the projections, you're right, we're going to need that. So I'm going to be around until you carry me out of here in a box, okay, or until you throw me off the commission. So next year I'm going to be asking these same questions.
And strategies, Chair. I think that's the other thing we're really looking forward to, working with all of you and the senior advisor to look at some strategies, because I think that's an area that we haven't done as a city for maybe just at least for a long time. But I think it's important for us to realign ourselves and really start thinking about long-term, because we do also have, you'll hear in a few minutes about a lot of the projects, the capital improvement projects we have. And the bigger question is going to come, we've got a lot of things to finance. How are we going to make these projects a reality? So I think we're at a really good place, and the feedback and the comments you're giving us tonight are definitely in line where staff is, and you have our commitment that we're going to have more of these discussions in the next few months.
We feel that.
John, back to you.
Okay.
Well, thank you.
I'm sorry we made that statement in the beginning of the meeting. Thank you. John, go ahead.
Thank you. So now I want to move on to slide 18. I'm going to take Councilmember Braun's advice and go from draft 2 to draft 3 on here. And so here, these are the changes that have occurred from the May 16th meeting to today. And you'll see in here, there's decreases in community development on there. Some of these things are just simply adjustments as we're going through the budget, if we're finding errors or, overstatements, understatements, et cetera. So that was the case here with community development. Community services, we had a slight increase. It's primarily just adjustments in personnel. Finance, we had a slight decrease, about just under $4,000. In police, we had an increase of $165,000. And that had to do with adjustments to the Tesla contract in there. And then in public works, we had decreases of 79,000. Again, that had to update that related to personnel on there. And then we had a decrease in capital projects of about 147,000. Next slide. So here, this is here's where we're talking about our projections for this year. And this is on slide 18, or excuse me, slide 19 for everyone. And so here, we always start out with our beginning fund balance, our audited numbers. We refer to this, we start with our unassigned fund balance because that is really our spendable fund balance. On there, we have our projections for revenues, our projections for expenditures, our transfers. And one of the changes with the transfers that occurred this year had to do with, we received an invoice sometime in late February, early March from the CJPIA for $1,654,000. And so that's what drove this transfer up to 2.2 from its original number. One of the things that we're going to do is the CJPIA, they have offered that if we pay this invoice in one lump sum, they will give us a 10% discount. That's better than the rate of return we're getting on any of our investments. So we're going to probably move forward with that. That will save us approximately $165,000 on that cost. That's included in these projections for fiscal year 23. Next slide. Here are the changes in the reserves. And you will see in here, so we've discussed this earlier as well. And so our original beginning balance was just under 6.3 million. We're making it 1.8 million of adjustments in there. And some of these are, I'm going to say, corrections. And so I want to point out a couple of these here. So for the stormwater, that is just the normal course. We're actually doing that work. And so we're adjusting that reserve down for that 300,000. We see the library park drainage. That was really an error. It's been in the reserves for several years. It really should not. That work has already been completed. And so therefore it should no longer be part of this. We've applied, we had eligible costs that were eligible to use the Slater reimbursement. And so we took advantage of that for 40,000. The SR 110, this has already been appropriated. And so we did not want to include it in the reserve because we're almost like double counting if we leave it in there. So we wanted that out of there. The last thing I want to point out here is in the stables. And again, this is more accounting or being arcane with the accounting.
John, can I ask where it was appropriated to?
It was to a CIP project.
Okay.
And we can go in, when we go into the CIP, we can point that out on there. The stables is not really part of the reserves. It's referred to as part of assigned fund balance. So it's a different classification. And so I did not want to commingle that with our reserves. And that's why you're seeing it being adjusted out of the reserves. But again, with all these schedules, I want to show how these things change so that it's very apparent to the end user with it. Next slide. So here is what we're projecting for the fiscal year 24. So we're starting with our beginning fund balance of 19.4 million. We're anticipating 39.5 of revenues and 36.6 of expenditures. In addition to that, we have about just under $5,000 of transfers in and $1.2 million of transfers out. The transfers out, and there's detailed schedules on everything in here. And so on the transfers out, those are going to CIP projects. And so we have detailed schedules on the transfers out to see what the $1.2 million is. And then adjustments on the reserves of 500,000. If you can go to the next slide, please. So here's the adjustment of 500,000 on the reserves. And again, we're continuing on with a stormwater project. And so we're going to basically exhaust that reserve next year. And then we are also adjusting the mental health reserve. And that's really to help offset public safety costs.
So I want to actually speak to the mental health reserve.
Sure.
So that is a one-time funding source. And
Correct.
from my understanding, it's to help pay for a position.
Correct.
And so that is an ongoing expense. And yeah, with through GFOA, it's pretty clear you're really not supposed to use one-time revenues for ongoing expenditures.
So let me speak to that. What we're doing is our primary goal with the budget on an annual basis is to present a balanced budget. That's our
John, I'm
primary
going to answer this one because I can give some context. This particular line item, this was previously the funding that was used to pay for our deputy police chief. 2 years ago, that was transferred out because the city went through changes, that position was no longer there. And the reason that money was transferred into this account was because we were going to be using it for our mental health clinicians, a lot of the programs we're doing in the community. We've been able to actually partner with the San Gabriel Valley Council of Governments, and they're funding quite a bit of those initiatives. So this funding is going back to where it used to be. So this was something we had in our budget previously, and it paid for the deputy chief's position.
So again, the problem is having a one-time funding source used to pay for ongoing expenditures. And for paying for deputy chief position,
This was the funding previously in the city that was for the deputy chief. So they moved it out into this reserve to use it towards mental health programs and services. So it's going back to where it should be.
and was that at council direction?
Yes, it was in the sense that because that funding, we had put it on hold to use for that programming. We've now gotten that programming paid for through the Council of Governments and through several grants through our legislators. So we no longer need that funding to be put in that reserve. So it could go back to.
So instead, it's going back into the general fund.
Fund balance, yes.
Fund
Yes.
balance. But again, I'm going to say this again. The policies are, it's pretty clear. I went through GFOA. One-time revenues, whether it's from the fund balance or whatnot, is really advised to not use for ongoing operating expenditures. That's just saying it. I mean, I'm really glad to hear that there's funding and money being used towards mental health, because I was also a little bit concerned about that. But my primary concern is from strictly a financial standpoint here of being careful of using reserves to pay for ongoing salaries. Because then the question becomes, how are you going to pay for that ongoing salary next year?
So just to kind of address that comment, it's a valid point. The budget is a very dynamic document. And so when we're making these type of adjustments, again, we're trying to present a balanced budget, number one. Two, what we're trying to do is there's always timing differences on different types of expenditures. So we're making this adjustment for this purpose here. However, as I noted before, we have about $1.5 million of one-time appropriations we're not going to have in the future. So, and I'm pointing that out not to specifically talk about that one-time thing. What it means is we have a lot of dynamics that are going on. So there will be other adjustments as you're going forward into the years, and that's what the 5-year projection models are for.
Sure.
For us to address that.
So I'm going to read something straight from GFOA in use of unrestricted fund balance above formal policy requirements, and formal policy requirements being our minimum fund balance. It said in all cases, uses of those funds should be prohibited as a funding source for ongoing reoccurring expenditures. I'm happy to share that with everybody in this room. I didn't make it up.
So with respect to that, and quite frankly, with respect to GFOA, so they have generalities, they have general guidelines of certain things. And so, for example, you should in general not use one-time revenues to pay for ongoing expenses. You should have certain reserves of certain percentages as a general rule. However, each city has its own unique dynamics that are going on. And so with that said, for example, the GFOA cites that you should have a certain percentage with reserves. I think that's a very wrong approach. I think you should be doing a risk assessment of all the risks that a city is going to face and do the probabilities on those risks and determine the valuation of those risks. That's what your reserves really should be based on. That takes a lot of effort, it takes a lot of resources. So the GFOA is taking the approach of just coming up with a percentage on there for simplicity purposes. It is not the end all be all. It is best practices, but each city has unique dynamics that they have to face.
Can I
And
just,
so it-
can I just ask one thing? So Commissioner Rossi, if we did not include the 200,000 transfer in, we'd be addressing this issue.
Yeah, I mean, I think that the concern is doing this kind of thing where you're taking a one-time revenue and then saying, well, we're going to move it over to pay for this
Yep.
position without any plan for how are you going to pay for that position in the future. And again, part of the challenge is that we don't have projections, right? Revenue or expenditures. So that's, if it was spent towards any other thing, if it was towards mental health or whatnot, I would say, okay. Or if it was towards, police training in dealing with people with mental health, all that stuff, I'd be like, sure, I get it. And I understand the position of saying, well, we actually have covered mental health issues. I do think it's a serious crisis in our community. And, we had a fairly recent tragic situation that happened just a few blocks away. So I am kind of concerned about we got mental health covered. But really it's this practice of taking these one-time revenue sources and saying, oh, well, we'll cover this position, but you have to think past this year. I understand budgets are this year, you're looking at this year, but really we need to start thinking longer term and planning.
So let me point one thing out here. When we're talking about reserves and changes in reserves, we're not talking about revenues and we're not talking about expenditures. We're talking about putting that money back into the fund balance. So when you look at the context and you're going to say, I want to look at revenue, ongoing revenues, and I want to look at ongoing expenditures, you need to look at the ongoing revenues and the ongoing expenditures. Reserves are not that. They are inverse of the fund balance. And so all we're doing is we're saying we're removing this reserve from that reserve designation and we're putting it back into spendable fund balance. So when you refer to, ongoing deficits, you have to look at the revenues and you have to look at the expenditures.
John, the fund balance is not an ongoing revenue. That's just plain stop.
The fund balance isn't a revenue at all.
Exactly. That's my point. So as it reverts back to the fund balance, it's not an ongoing revenue. So while we can go and dip into the fund balance, we need to actually have a good justification for why we're doing it for an ongoing expenditure.
So when you're having this,
So, whether for capital projects, for one-time expenditures,
Mhm.
even including like the, one-time issues that we had with the insurance,
Mhm.
all good reasons to go into the fund balance. The concern that I have is the practice of going to the fund balance or going to the reserve
right.
for a position that you then need to figure out how you're going to fund in future years.
So again, when you're talking about revenues and expenditures, you're talking about revenues and expenditures. You are not talking about reserves. We are undesignating this reserve and we're putting it back into fund balance. So if you were to look at on page 25 and 26, the focus should really be on the revenues and the expenditures. Are they in alignment? Are they not in alignment? That is really the nexus here. So when you're looking at this in total, fund balances are changing because of revenues, they're changing because of expenditures, and they're changing in adjustments because you're doing transfers in or transfers out, whatever the case may be, for whatever the purpose that may be. But those are the things that need to be looked at when you're talking about reserves. That's just going right back into fund balance. So,
Right, but
so
fund
let me
balance
finish on
reserves-
this because it's an important point. So we're talking about, funding public safety, right? So that is an operational cost and that cost is reflected in the expenditures. So when you're looking at those expenditures, you should be looking at the revenues in relation to it. You should not be looking at reserves.
I understand that I'm not the one who said that the money would be going to partially pay for a new position.
Understood. Yeah.
So that came from you and I'm speaking to that.
Yeah.
Right?
Yes.
So I completely understand that.
Okay.
The issue speaks to the same point, is just being concerned. And we go, it's fine. We'll go ahead. Let me let you finish your presentation and I'll walk you through some things. So
I was just going to say, I think you're making a valid point. And our suggestion is this needs to go back into general fund. So our recommendation is that this reserve be put back in the general fund because it is not needed for the purpose it was originally allocated.
Absolutely.
That's all we're saying, so-
That's I'm fine with.
Okay.
I actually didn't have an issue until it came to how it was going to be spent. And when that came up.
Point
that's
well
what I had.
taken. Point well taken. But just for clarification, it's just, we're recommending that because it's no longer needed for the purpose it was originally identified, it can be free to go back to the general fund. So
Thank you.
John, continue.
Thank you. Next slide. So this slide here, and this slide, I believe, was presented on the May 16th commission meeting as well, is just reflecting all of the revenues within the general fund here. And so you'll see in here, the number one revenue source is property taxes. And you'll see that the growth there has been fairly healthy in there. We made revisions on the 23 estimates. We got updated information from our property tax consultant. And so we updated our 22-23 in there. And we're anticipating about a $1.2 million increase within property taxes. On our sales taxes, something I want to point out here. So, if you look at 1920, and you'll see, for example, we had $2.8 million of sales tax, and then all of a sudden it jumps up in 21. Well, that's of course Measure A, when Measure A kicked in on there, and then the sales tax continues to have a nice healthy growth. But now you're starting to see it softening a little bit in 22-23, but we're expecting it to improve in 24. And these are based on our property and sales tax consultants in there. And they're very reputable. They're not only in the state of California, they're in most other states as well. They're a very large organization and highly specialized in this field on there. The next one is here, utility user tax. And so here's something's really kind of unusual. So you'll see in here, we have our estimates in here for 23, just about 4.3 million. Our estimate's slightly lower than that for 423, and then we start going back up. And one of the things I want to point out there, normally the UUT has historically been almost on a slight decline. And the reason for that is because people are shifting away from using landlines, right? And so that's had an impact on our utility user tax. However, over the last year, the cost for electricity and gas, as everyone painfully knows, has jumped considerably. And so we're benefiting because of our taxes are based on that. And so our taxes are actually growing fairly healthy on that. The other thing I want to point out here is, so with respect to current services, those are charges for services like, where people come in for permits, planning fees, things of that nature. And so those are just simply charges for service. But if you see this trend here in this growth, what it's really telling us is in South Pasadena, the economy here is fairly healthy. It's a fairly well diversified revenue base, and there's a lot of activity. And what this does is it portends continued improvement in property tax. So that's a really good indicator that will probably start reflecting, in 18 to 24 months. We'll start seeing those impacts on property tax. And then we just have other revenues, and then we have reimbursements from other funds on there as well. Next slide. This is just simply a graphical presentation of that same information we've looked at there. And as you can see here, the bulk of it is property tax and special taxes, followed by sales tax, UUT, current services, and then following use of money and property. And again, use of the money and property, that's interest revenue that we're earning on our money. And then in addition to that, for example, if we have facilities that we do rent out, for whatever, weddings, parties, rental halls, things like that, revenue that's generated from those type of assets falls into this category as well. Next slide. So, with the city's in the business of providing service. So that means labor, that means staff. And so the bulk of our costs are always going to be in labor. And this is no exception here. Then you'll followed by our operations and maintenance and capital outlay for things such as, cars, vehicles, heavy equipment, and things like that. Next slide. This is just simply a graphical representation of that same information here. And again, you can see the lion's share of it. This is related to labor cost. And then you'll see followed by maintenance and or materials and operations and capital outlay. Next slide, please. Here is just simply breaking down our expenditures by department for the general fund here. From city council, city management, management services, finance, police, fire, public works, community development, library, community services, on there. Next slide. So this is just another graphical representation of that same information here. And again, you'll see, public safety is always the bulk of the cost between police and fire. That's the case in all cities, followed by public works, community development, finance, and community services. Next slide. So here, this is just where we're reflecting the comparison within the funds, between revenues and expenditures on there. And so the general fund, we're fairly close to being equilibrium. And then the one fund I'll particularly point out in here is you'll see the capital projects fund, and you're just seeing expenditures. And that's because, again, transfers in are not revenues. So we don't consider those revenues. So in CIP funds, you're only going to see the appropriation side of things. Next slide. Now we're going to move on to the department presentations here. Next slide. So with the city council, staff has consolidated all city council related projects, line items under the city council budget, as well as providing additional district specific outreach. Next slide. We're listing out here, we're referring to these as wish list items in here. And there's been quite a few conversations on this, the Vision 2050, the Library Master Plan, and the Multicultural Community Event. Next slide. The city manager's budget. So the city manager's budget is basically a status quo, especially in consideration with the mid-year adjustments for providing services for funding for new city website, wish list items from the city and wish list items from the city council. So their core services are community outreach and engagement, operational oversight of the agency, economic development and business liaisons, government relations, legislative affairs, social service liaisons, and veterans affairs. They really haven't made any other requests. Next slide. Management services. So the core of their services is really, they're providing, innovation, technology, IT, grants management, special projects. They're responsible for human resources, risk management, providing human resource management, recruitment, employee training, labor relations, safety, risk management. They also have city clerk under them for records management, elections, boards, commissions, and city council support. Next slide. Management services position requests. So the Human Resources Division, they're requesting to reclass a management analyst to a senior human resource analyst. They're also requesting to reclassify a management analyst to a human resource analyst. And they're asking for one new position for a human resource specialist. Next slide. So the next thing here is on their request, they're asking for $197,000 for IT equipment upgrades and replacements. And that's broken down between network hardware, rebuilding end-of-life servers, workstation equipment replacement. They're also seeking $60,000 for the Office 365 annual subscription and $32,000 for recruitment, onboarding, and employee engagement. Next slide. The finance department. So the finance department accounts for all city and successor agency expenditures. We administer business license, water billing through third party. We do account for revenue collections in here. We provide citywide accounting functions, including grant accounting. We process biweekly payroll through third-party vendors. We prepare payments of obligations for review and approval by the city council and send out approved check warrants. We prepare the city's comprehensive annual financial reports. We prepare other annual reports such as state controller's report and other federal and state agency reports. We prepare the annual budget. We prepare monthly investment reports to the city council summarizing investment holdings, rates of returns of investments. Next slide. So the request for the finance department, we're requesting one new full-time accounting technician. This position will help the department with administrative duties, phone calls, data entry, payroll support, accounts payable, receivable, helping with basic accounting, clerical types of activities, and other ad hoc assignments. Next slide. The other agency, the other thing is, so we're looking at, you know, the CJPIA, we're reassessing our insurance carriers with their internal service funds to see if we can do better with another like joint powers agency rather than where we are right now. And that also includes for general liability and workers' compensation. Next slide. Community services. So the department overview, so it provides senior services for older adults, educational, social, physical, nutritional, emotional services, recreational youth services, coordinate recreational classes for children and adults, after school, summer, childcare, facility and park reservations, city special events. They also are responsible for transit. They operate the Dial-A-Ride program, offering essential transportation services for seniors and those with disabilities. They also provide community services. You know, they're providing general department oversight, budget, grant administration, contract management for city-owned facilities. Next slide.
Ron, has any of this information changed from the past meeting?
No. No.
Is there a reason to go over the detail of each department's function if we've gone over it before?
So I'm going to let the city manager speak to this.
We wanted to make sure we mirrored your presentation, the same presentation that council had. And we did go through the functions of each department and we presented. If the commission wishes for us to move forward, we can. We wanted to be diligent and give you the same material that was presented to council because we did break it down by department.
Wait, was this, I'm sorry, I can't remember because I did watch the council meeting. Was this presented to us the last time?
Not this level of detail.
No, not this
Commissioner.
level.
Then I apologize. Go.
No, that's okay.
Okay.
We just felt that we did this with council where because previously we had just, I think, one sheet with all the positions.
Okay.
But for the purposes of the budget workshop and a detailed presentation, we felt it necessary to go through each department. We can certainly speed that up if you like. So maybe John, real quickly cover the next, you've already seen some of this, but not this level of detail.
It's up to the rest of the commissioners. I just was having some deja vu. Thank you.
Yes. It's a lot of information that we have covered over the month of May.
And John, may I propose that we have been sitting here for 2 hours
Sure.
listening to you diligently?
Yes.
Attentively. And I'm going to propose that the mind can only absorb what the seat can endure. Let's take a 10-minute break. Let's reconvene in 10 minutes.
Absolutely. Yeah, so let's jump to 42. Yeah, let's go back to 41 real briefly, and we're just going to kind of go through these quickly. So with community services, they're asking for basically a reclassing from 2 part-time positions to 1 full-time position, and they're going from management aides to full-time to 1 full-time management analyst. They're asking to convert 1 part-time communities coordinator to full-time coordinator. Next slide. The other thing with community services is they're asking for a few things, and some of these are almost like one-time things, and others are ongoing. Obviously, new furniture is a one-time thing for the reception areas. They're asking some additional supplies for the Camp Med. They're wanting to increase class offerings. Those are ongoing costs in there, and they want to do an assessment of their transit division. Next slide. Okay, so now we're moving on to library. So with the library department, some of the things in there, I want to skip this slide here. And I just want to talk about their additional requests, because that's really what the dollars are. So they're asking to fund, it looks like some training for the annual American Library Association annual conference, funds to do some refurbishments, paint, recarpet, things of that nature. Next slide.
John, I have a question about library.
Yes.
Quick one. There's a line item, or I think it's like $254,000 for
Yes.
HVAC repair.
Yes.
Why is that so high?
So I'm going to actually defer to specifics on that to the Public Works Director. I can only speak to it in terms of dollars. Public Works can really go into it from a program viewpoint.
Is that HVAC units plus the ducting system and multiple HVAC units?
And I'll just chime in, because I can just give you a little bit of info, there's a roof leaking, there's an HVAC problem. And I know they're applying for grants as well they have applied for a state grant. Is that the same thing or is that different, Ted?
No, that's correct. There's 5 HVAC units in the library, so this would be a replacement of 4 out of the 5, and that is correct also. When we applied for the Building Forward State Library Infrastructure Grant, we included that, and it's about a 57% match that's included in those numbers from that grant.
So that doesn't include any duct work. It's just 5 HVAC units?
Exactly. Yeah, it would be the replacement of the HVAC units. We do have in a separate, we had there is a little bit of ductwork involved in that replacement, but we wouldn't be like doing any sort of full scale ductwork replacement in the library. Thank you.
Yeah, I think the idea is that hopefully we can do the fixes that have to be fixed to the library for the short term, and the grant will be helpful. And then hopefully enter into a master site plan that's on the wish list and kind of really come up with what do we need the library to look like. And particularly given that there was a bequest for a children's amphitheater for a couple of $1 million. So it's kind of like do the short term while we think about the long term is the idea.
Okay, community development. So I'm going to skip this slide unless everyone wants to see it on there. And I'm just going to go to what they're requesting on slide 46. And so they're asking to upgrade 1 part-time coordinator to a full-time position, and they're asking to add 1 full-time management assistant position to help them with the admin functions within the department and the housing division. Next slide. Some of their other requests are related to research development, tenant protections. For example, just recently the council passed the emergency ordinance on there to remove, racially restrictive covenants, updating the court cultural heritage ordinance, improving the community programs, and also conducting development department assessment. Next slide. So with respect to the public works, so the public works really covers a lot of areas. So I'm going to go through some of this in a little bit more detail, but I'll try to move quickly through it. So within the public works, they have an engineering and administrative department that, you know, covers permitting, land development right away, capital improvement programs. They have people managing for, you know, their budgeting, their grants, their invoicing, especially as we talk about CIP projects. There's going to be a lot of that going on with respect to that on there. And then they have the other side of it is their operations and maintenance, which is building facilities, you know, parks and forests, traffic signals, streets, sidewalks, infrastructure of that nature. Next slide. So in terms of their department overview, this is continued. So they have a division for their environmental services and sustainability, you know, which is water conservation, it's getting late. Conservation, refuse, recycling, climate, waste minimization, environmental programs. And then of course the water division for production and treatment, distribution and storage, water resources, supplying, planning. Next slide. So this is just simply their org chart that is presented within the budget document on there. Next slide. And some notable updates for them, you know, related to safety features. You know, one of the things that Public Works is being impacted for, as I mentioned earlier, you know, our UUT going up. Well, that also means we're paying higher utility costs as well. On there, cost increases for lighting and landscaping, cost increases for contract services, parks repairs, vehicle purchases, street programs, transportation studies and evaluations, increased water system components, and regulatory fees. Next slide. This is just simply a illustration of breakdown of their department, the divisions within the Public Works Department. Next slide. And so this is with their wages and salaries. The next one is really just breaking it down by really their operations and maintenance component. Next slide. And then we move on to the police department. And so here, you know, of course, they're providing full range of law enforcement services. They have support services division. They have patrol division. Next slide. Their request. So they're asking for a professional standards sergeant in there, and they're asking for a police clerk and an administrative secretary. Next slide.
John, these are in addition to the existing open positions?
That is correct. That is correct.
The first position that's being requested is actually a position we used to have that was eliminated, I believe, 2.5, 3 years ago. So this request is to bring that position. It's one of the most critical positions in the department that manages the training, the policies, procedures. So we're asking to bring that position back. The other two positions, I believe, also used to be in the police department that were eliminated. We're bringing the positions back.
And I just want to add with respect to that Office of Professional Standards, it's really a position, given sort of some of our recent litigation that we've had, it's really a position that it was too bad we didn't have it. So it's something that's really needed in the department, and you know, just want to mention that.
Yeah, so you could consider it almost like a risk management to mitigate future liabilities. Next slide. So with respect to the fire department, so they provide, you know, as an all-risk agency, they're providing 24/7 responses for medical, fire, hazard materials, rescue incidents. They also have an emergency management division that coordinates emergency management for the city, including, you know, the Emergency Operations Center, or EOC, and updates to local hazard mitigation plans and emergency operation plans. And they also have public education, including community emergency response training, safety first, and other programs of such. Next slide. Excuse me. So the fire department is requesting an upgrade of one part-time management aide to a full-time management assistant. Next slide. Other requests, so increased costs for professional services for the fire department, assessment for critical incident stress debriefing and counseling. They're requesting additional costs for medical supplies, and that's just, cost of materials everywhere. Increased costs for contract services with the city of San Marino for shared command services. Next slide. Now we're going to jump into the CIP in here. And so I'm going to kind of briefly touch on this because I'm really going to have the Public Works Director step up and have more detailed conversations on the specific projects within the CIP program. So one of the things that that the Public Works prepared is a 5-year capital improvement program. And it's a connection between the general plan, the various master planning documents. So within their 5-year plan, the first year of the plan is incorporated into our 24 budget in there. We're also breaking down the listing of projects and the funding sources. And as mentioned in here, year 1 is included in the proposal to be approved on June 7th. Next slide. So included in the overall CIP are streets, utilities, parks, infrastructure, multi-year large projects, including technology projects, master plans. What isn't included in CIP is there is no maintenance operations. There's no vehicle like equipment replacement, things of that nature, or like standalone studies in there. And so one of the things I want to kind of bring up with this, Commissioner Rossi, when we were talking about the funds and the descriptions within the document, one of the things I noted is we have a fund in there for equipment, it's like facilities and equipment replacement, and it's classified under like capital projects. That's really that really should be an internal service fund. It's an internal support fund. And so we will probably change that designation because it's really not a correct designation for that fund. So if you look at other cities for their equipment replacement, vehicle replacements, that's an internal fund function. Next slide. So within the overall 5-year program, what you're seeing there in the boxed in area is what we're projecting for carryovers from 23 rolling into 24. And our total CIP budget that we're including in the proposed budget is $16,386,000. And we have detailed schedules to break this out. Yes.
I have a question on this. I just don't understand it. Looking at this this page, the second line, golf course. We've got the carryover from 2022-23 of $735.93. Nothing in proposed 2023-2024, and nothing proposed for each of the successive 4 years with an ending proposed 730. What? That money's already been appropriated and it's not going to be
Rolled over.
used?
So I'm gonna have Ted come
Yeah,
up and
I
speak
just-
to that.
Good. I just
So
don't
again, because-
understand how it works.
I can talk about it from the financial perspective. The moment we start getting into from a program view, I really need to have the departments with their expertise in their programs. So I'm going to defer to Ted on this.
Thanks, John, and good evening, commissioners. Really, the purpose of this slide is to show you how the 5-year CIP is formatted. So really, we're just showing 2 examples of projects. The first example being a type of project that we expect ongoing costs because it's a longer term project. And then the second being an example of a short term project, which should be completed in the year that it's budgeted. So that's just really just to show you that, the concept of the initial appropriation in the previous year, the projected work, which in this case wasn't the complete appropriated money. And so because it's a multi-year project, carrying over the funds from the previous year that were not expended because we still need that money to finish the project. And either the project gets finished in the current year, as in the second example, or we do some component of the work in the current year. And for planning purposes, we can expect additional funds needed to complete that project over the 5-year term. So it's really this slide just to give you an illustration of the way we've structured the different projects.
Okay, so this carryover from 2022,
Let me give you
2023,
the mic and then you-
that would then be used in, I mean, it's not showing it being used in any excessive year. So I don't understand what's happening.
So
that
from,
money.
from just a practical perspective, let's talk about this golf course driving range project. So, if you're familiar with the driving range, there's netting and poles on 3 sides of it. Last year, one side collapsed. It was one side that had been built in a recent year apart from the other 2 sides. So we replaced that side. Now in planning that was an issue because when that collapsed, we had to shut down the driving range. And so, it was revenue lost and, the recreation, we couldn't use it. So in planning ahead, we don't want that to happen to the other side. So we've developed this project to replace that other side. We expected to start that project in this current year for reasons we couldn't. Well, we started the project, but we didn't get as far as we expected to. So our projected expenses were small. Now we do expect to finish that project this coming year. And so when the project completes, that CIP, account is over. We're not going to have any additional transfers into the account and no additional expenditures. So we're just showing that years 2 through 5 have no expenditures.
Okay, so that project will.
Would
then
be
get
complete,
completed.
yeah. Whereas other
this year.
projects may not. They would
Yeah.
take the 5 years or in some
Yeah.
cases longer.
I was just confused about why it was showing 0 for the current year, but if there was an amount in the current year, then that would be an additional appropriation on top of the 730 carryover. correct?
Yeah, exactly. So in the 2 circumstances, let's say in year 2, there'd be 2 circumstances. There'd either be, there's money that you didn't expend in year 1, and therefore you need to carry it over and you'll want to expend it in year 2. Or the circumstance of you've spent money in year 1, you expect that you'll need additional money in year 2. And so there's an addition. So the reason we have it in 2 columns there is the carryover and then the proposed is so, if we in last year we combined these columns. And so it was unclear what money had been, not used and carried over and what money we were adding to the project. And, per John's recommendation, as a matter of transparency, we wanted to show what's been carried over, what was not spent, and what we need to add to the project for new funding. And sometimes the funding is expected. In other words, like it's year 1, we can tell you what we're going to spend in year 2. And sometimes it's not expected. It's year 1, we get to year 2 and we say, no, this is going to cost more or sometimes less than we expected. And now we need additional funding.
Commissioner Quaid, I'd like to point out in your binder,
Yeah.
if you go to page 52, you will see a better picture of this in context with the budget. So let me know when you're there. I'm going to kind of walk you through this a little bit, and we'll use that project as an example.
Okay.
Okay, so you're going to see in a section in here, community services and parks. And the second line down on there is the golf course netting replacement. So you're seeing the original history. It was originally budgeted in 23 for $750,000. They're projecting to spend less than $20,000 for fiscal year 23. The residual is shown as a carryover that is going to flow into the 24 budget.
Got it.
So that you can see the
Yep.
kind of the flow of this from how did it go from this year into next year? And
Well,
why is it changing?
And what also makes it clearer for me, I mean, on top of Ken's explanation, is that we've got the fiscal year 2023-24 budget with that 730 number
I'm going to say he's an engineer. I'm an accountant.
in it. Well, I'm an accountant too.
So, thank you for the golf course netting. That's very sad, those like months that was out. But I wanted to ask on the SIP budget. So you were only able to spend a fraction of kind of the budget from last year, which needs to move over. And I understand there are a number of reasons for that. What I'm concerned looking forward though, is especially again, like talking about the margins that we have in our operating budget, is now we're looking at the following year, $20 million, the following year, 42 million, 34, 25, and we're going to 140 million. And I'm trying to understand where the money will come for that and how we're going to plan for that. Because I think that's something that we need to start considering as well on a go forward basis of how do we plan to put aside money for capital projects.
If I could offer one part of that, and then maybe John can elaborate, we will not be able to afford all those projects. One of the things that we're trying to accomplish with this 5-year CIP is offer all of the projects that have been proposed or may be necessary, and have the commission, the council, and the community provide their feedback on what should be prioritized. So, in the planning effort of looking at years 2 through 5, there's a lot of infrastructure needs. Now we can prioritize those and inform you of what is absolutely necessary, or in some cases, what we already have funding for. Obviously, we'll want to carry forward with the projects that are funded and are ready to go. Other projects, may be more discretionary. Other projects are, necessary in the way of like, we need that infrastructure in order for the city to thrive. So that's, one component of that. That we have a slide in here that you'll see that maybe about some large percentage of those projects are unfunded, and therefore, if we can't find funding for them, we won't be able to do them. Now, to that point, as we're looking at the prioritization now, if we understand what the commission and the council's priorities are, we can seek that funding. So, we know that we're going to do something, Project A. Project A may be eligible for various types of grants. We'll focus our energies on trying to fund that project. Or in the case of necessary infrastructure repairs, we maybe needed to look at other types of revenue sources, bonds, et cetera, so that we can achieve that net, fulfill that funding need.
Okay, thank you.
So again, just to elaborate on some of these projects where in the 5-year plan, where there's no funding source right now identified, over the long term, we may be doing different types of financing, for example, if it's street repairs, street related projects, we may do bonding from gas tax revenues, because it's a steady stream of revenues. And so we can pledge those revenues if we get favorable interest rates. And, say, for example, we issue, I'm just throwing out a number like $20 million of bonds, and have those bond proceeds to more aggressively deal with infrastructure on there, and then using the gas tax funds, just as this example, as a way to pay for the debt service on that financing. That would be one approach.
Right, which is, one of the reasons that I am actually being so tough on some of the issues when it comes to the fund balances and our operating margins is, if we do want to go for things like bonds, then we need to get things cleaned up and in tip-top shape for that, and really be able to have a revenue source to pay back the bond debt. I do, and like I'm like all for the capital improvement projects because our city needs it, and anyone who's driven down the streets knows that. The question I do have is like, how much of this proposed budget do you think you'll be able to do given your staffing levels right now for this year? And I know that there can be carryovers in the future years, but.
Sure. Well, there's been many issues as to why we're unable to accomplish. Well, let me start by saying this. The beginning of the story is that, the last year was a new capital improvement program, completely new to the city. And so the primary parts of that exercise were to dig out the list of projects from all these different sources, from all these different initiatives, plans, commission directives over years, figure out what hadn't been done, what had council approval, what had funding, and even to another level of that, what funding was lapsing, what was not, and that explains some of the, balance issues, the fund balance issues that you see. So really, last year's iteration of the capital improvement program was to set a baseline for what is out there and what are the top priorities. Now, this year has been spent in really trying to develop our project delivery methods. Staffing resources have been a big issue, and most of the resources that we need to deliver capital improvement projects are actually just getting hired now. And in fact, one of the positions we're asking for, this principal engineer, is intended to oversee the capital improvement program. So right now we have to do that at the executive level among, managing the departments and dealing with all the other operational issues we have. So to answer your question about whether we think we can do it, we've particularly strategized on the types of projects that we're looking at this year. Number one, we absolutely have to have the projects, the funding is, in a critical state that, it may lapse if we don't make progress on the projects. So with that said, those funding predictions have to align with the funding agreements that we have for those, other agencies, or the annual reports and funding plans that we've presented. Now, it may mean that we don't achieve them, but we have to try to make progress so that we can modify the funding agreements in time. Like, for example, one of the key issues with the funding agreements is if you don't make any progress, it's unlikely you're going to be able to renegotiate your timeline for the project. So we have to do the projects and get as far as we can so that we can push off the funding a little bit later. So you'll see a modification to that funding schedule as we get into the projects. And that's intentional because we want it to match up. We don't want to, give Metro one story and then realistically say in our budget, yeah, we're probably not going to get that far. What we have to do is we have to try to get that far and then try to adjust. The other thing I'll say is a lot of the projects we're proposing this year are, now that we've sort of managed to get through all of our procurement challenges, we've adopted this procurement policy and we've been working on our project delivery methods. A lot of them are installations. They're not necessarily these complicated planning, design, and construction projects. You'll see some of our facility work is basically procuring new fire department doors and getting them installed. So, we have as long as we have the administrative capacity to handle those projects, we can knock out a lot of projects that are really, rather simple in terms of capital improvement execution. And so that's what we're hoping to make a big dent this year. Yes. And, a huge component of that, 25% of that budget is streets. And so we've made, a massive inroads in terms of reorganizing the street projects, bringing on the resources we need to execute them. And so we basically have 4 concurrent projects, each with multiple streets in them underway right now. And so, over this fiscal year, we'll have a cascade of projects that get bid, released, and constructed. 4 bid packages. And so that would be a big chunk of the, of that improvement program. Hopefully that answers the question.
No, it does. Thank you.
Okay.
Something I would like to also point out related to this. So if you, within your binders on pages, starting on page 58 through pages 64, you're going to see the first page is, here's all the CIP projects. So here's what the original budgets, here's the projections, here's if we're asking for additional money, and here's the total amount being proposed for the fiscal year 24. But the pages that follow that are showing the sources that are paying for those costs on there. And again, coming back to Commissioner Rossi's comment about, paying for these things, these are the sources for these projects now. Going forward in terms of the 5-year plan, that's where a lot of the funding is going to have to be identified, based on the priorities that are decided on those projects. So this is just a snapshot of that for 1 year. Okay, so let's move on to the next slide. So I think at this point, these are really all the general groupings within the CIP program. And again, you will see these same programs. And let me identify the page within your binders here. Let's see here. So you're going to see these same groupings on page 52 within your binders.
John, I was going to ask the commissioners, would you like for us to have, since Ted is here, maybe to briefly go through some of these categories? Would that be helpful? Because there's quite a bit of projects and these are citywide initiatives and you're going to hear a lot about these efforts. We have him here tonight. Would you like for him to go over some of these? For your understanding, I think it may be helpful only because this is a huge undertaking and we're finally at a place where we can go through and explain the projects. Would you like for him to maybe go through the categories? He doesn't have to go in depth, but maybe just to go through the highlights. Thank you. So John, I'm going to have Ted go through.
Gives me a chance
Absolutely.
to sit down.
Thank you, Armenic. Thank you, John. Yeah, so as John had mentioned, we have 11 categories of projects. And so these are really grouped in terms of understanding, where they are and the objective of them. The first group is general buildings and facilities. I touched on this. Some of these are installations. Some of them include extensive work of assessing facility condition issues and then repairing them. Yeah, we have 2 new projects on this list. They're with an asterisk in front of them. One is to replace the exhaust system in the fire bay over here. If you look at how the engines are configured, they basically start inside the garage and they have like a tube connected to their exhaust system and that separates when they leave. And so that system needs to be replaced. Again, it's a rather simple project in terms of getting it done. And the senior center flooring was added, it was basically a initiative by the senior foundation to get the flooring reinstalled in the senior center. So we are administering that project. A category we added this year is the housing authority. A recent assessment of if you're familiar with our baseball fields over by Nelson Field, there's a house right next to it. That's a city-owned residential property. We've identified some, issues with that property. So we're taking the revenue that we're earning through the housing authority to actually put back into fixing up that house. So we're setting aside money each year to make improvements, and we have a list of those improvements. On the next page, we have some of our larger information technology initiatives, such as, we have our community development permit management software to expedite the permitting process. We also have a SB2 grant for that. We have our city website upgrade on that list. In the community services and parks list, 2 construction projects. We have the design is complete for the Gravalia and Berkshire Pocket Parks. Right now we're installing the electrical services for lighting. So those will be constructed this year. I mentioned the golf course netting replacement. We also want to develop a long-term plan for the parks. If you look on the long CIP, you'll see a lot of unfunded parks projects. And so we want to identify, how much does it cost? What could be potential funding sources? And then we're also going to initiate design, the design for improvements at the snake trail. That's been a very, a project that the community has really spoken out about getting improved. On the next page, we separated out the library. Councilmember Brown had mentioned we've applied and we're very confident that we'll receive more than a 50% match for some of these library projects. So we have a list of our improvements there. On the next page, we have some of our utility projects. We have some stormwater lining and repairs to do throughout the city at various locations. We have our stormwater projects. These serve multiple sources, but the primary driver for these is the compliance deadlines we have with the state in order to meet, pollutant reductions in our city drainage system. Sustainability projects. We have some money set aside for initiatives in the climate action plan. as well as the charging systems that we're putting in at City Hall to support electrification, fleet electrification. And then our solar panel installation, which is a project that's covered by the Clean Power Alliance. Last two slides, I promise. We have our streets program we talked about, our major four bid package projects, and also our HUD funded sidewalk replacement. And then we have some of our major transportation projects, which are funded through some of the 710 money, the Rogan money that we talked about earlier. There was a question about the SR 110 designated reserve. That money is no longer associated with the SR 110 project. It's associated with a different project on Fair Oaks to serve a similar purpose. But what John had explained earlier was that that money was identified in the reserves, but it was also identified in a fund we call Fund 108, which is the Rogan Match Fund. And so we wanted to make it clear that that money is no longer in the reserves. It's double counted. It's actually in 108. And this year we started finally spending the Rogan money. And so we have to spend an equal match. We're pulling money out of that 108 right now for the design of this project. We have some other projects on there for pedestrian improvements. And then lastly, our water projects to complement our street improvement projects. Where we're able to, we're going to be replacing those pipelines in many locations that we're doing street repairs this year are locations where we've had pipe breaks. And so this is appropriate. And then we have the biggest project on this list is the West Side Reservoir design and construction. So we finished our seismic and structural evaluation of that. We're moving into the preliminary design phase. We won't get into construction this year, but we're setting aside the design money and then showing what we expect the construction costs to be over 5 years. Any questions about the projects in general or specifically? The last couple slides here just kind of give you an overview. So this is the fund distribution for this year's projects. And you can, one thing to take away from this slide is how many funds we have. And, with this becomes administration, eligibility, reporting. So there's quite a huge administrative effort here. One thing I'll note is on the upper left, you see this blue one that says unlisted stormwater. That is funding that is not shown in our budget or our capital improvement program, because this is money that the city is getting a capital value from, but we're partnering with the city of Pasadena on the actual project. So, Pasadena took responsibility in a good way for the administration of that. So we don't have that cost burden, but we're actually going to have a $4 million investment into the city. And so that's represented by that, but the money doesn't change hands with the city. And then the last slide we have is just a very, very high level look at the current standing of the funding for the 5-year plan. To address the chair's earlier question, the top part of that 40% unfunded. And that, isn't necessarily a bad thing. It might just mean that we don't pursue those projects or that we have funding that we have to seek. But the other part of that is showing the expected funding for those other projects. But again, that takes a 5-year evaluation of the revenue, incoming revenue, and evaluating the expenditures to make sure that this is actually reasonable. We have not done that exercise yet, but that's something that we'll be working on. Thank you.
Thank you. This is actually very helpful.
So now I want to discuss just the upcoming steps. So after tonight, we're going to take all the recommendations from the commission, and then we're going to include them in an ad hoc report for the council for June 7th, and what the recommendations are from the commission with respect to the budget. And so we'll be presenting that on June 7th. Next slide. So the direction needed is, direction for the projects, the budget, the items that we've discussed tonight. The other item that we wanted to, the two other items that are really kind of headwinds. The first one is we're seeking chamber, or we're seeking direction on what we refer to as our business improvement tax. And I think I'm going to have Armine speak in, from a program standpoint on this.
Sure. So these were the two areas we identified as, actually, this was a discussion council had at the council meeting as part of their budget workshop. And specifically to the chamber, the BIT that the city receives is transferred to the chamber, and that's our partnership with the chamber as they provide a lot of economic development initiatives for us. This year, they have requested for that funding to be increased. So what happens, whatever the BIT is, the general fund also supplements it. So the chamber is being funded at 105,000, of which a little over $60,000 comes in through the business improvement tax. They're asking for, and so the difference is paid out of general fund. For next fiscal year, they have submitted a request for $157,000, primarily due to the increase in costs for a lot of the programming they're doing, specifically the eclectic. At the council budget discussion, I'll share with all of you the discussion that took place. Council asked a lot of great questions. The executive director, Lori Wheeler, was there. She explained the need of why they're asking for an increased level of funding. Council asked for a number of items to be brought back for a greater discussion on this topic. We actually have a staff report that will be published tonight, which addresses some of council's questions. And I believe we're recommending a lower amount for consideration. I don't want to misspeak, but I think we're recommending 128,000 instead of the 157, because we did reach out to the chamber again. We went through all of their requests. We're also giving the council other options to consider. I don't necessarily know where that's going to end up at this point, but we do have an agreement with the chamber for the services they provide. So looking forward to that discussion. We see a great value in the partnership with the chamber. We appreciate all the work that they do. I think council just wanted to have a better understanding of what they're requesting. And then John, maybe you could talk to the next bullet, which was a bigger policy decision that council is going to have to make. Certainly, we're open to feedback from all of you, and that's specific to our lighting and lights, our landscaping and lighting maintenance district, which seems to be operating at a deficit for several years now. And I believe this is going to be an issue that needs to go back out to the voters, because we're not generating enough from this fund to be able to pay for the ongoing expenses. John, do you want to add more to that?
Sure. So with the lighting and landscaping district, what's happening right now is the revenues are simply not keeping up with the cost of the district. And so we're anticipating receiving about $900,000, specifically about 905,000, and it's on page 25 of your binder, if you want to look at that. And even though it's getting late in the evening, so it's going to be strain on the eyes, it's Fund 215. It's not quite halfway down. You'll see it, the number 215, you'll see the street lighting in there. And so we're projecting that we're going to receive about $900,000, yet the cost of this is, over $1.7 million, leaving a deficit of approximately $800,000 in there. So kind of back to the point about the ongoing cost. So this is something where this will be borne by the general fund. It's either going to be borne by the general fund or we have to do something else. So it's a couple of basic choices with this. For this coming fiscal year, we don't really have time to go out, for a vote to increase the assessment district tax. That would be something for council to weigh in on. So therefore, it really is going to default to transferring money out of the general fund to cover this shortfall. But this is a discussion for both this commission and the council in terms of direction and how they want to handle this. So this was purposely left this way for that discussion. So this is some of the headwinds that we are facing. And so I wanted to bring that up to this commission and to have to take in their comments and directions for the city council for the 7th.
I guess my question would be, why wouldn't we fund it from the general fund this year? If we know that that's the money we're planning on spending, what is the reason to not have it funded from the general fund?
It's really to bring this to the attention of the commission and the council.
Yes, I understand, but then the next step is to like,
Based on their direction.
right, but then you can, I'm asking you a question, which.
Short answer is we are, but I think there's a longer discussion we need to have, or a bigger strategy, which is we can't continue supplementing the deficit from the general fund because we can't sustain that as far as the OLMB district is concerned because the costs are going up. The short answer is we will pay the difference. But we're looking for a policy decision whether or not we want to go back out to the voters to increase their dedication towards this fund.
So I think, I mean, is this a good time to maybe talk about the issues with the fund balances and the negative fund balances?
Well, but before we jump there, so the other comment here is, so if the revenues are only 900,000, do you want to decrease the level of service to be in alignment with the revenues? So it's the fundamental question. Do you want to adjust the service level, or do you want the general fund to subsidize it? That's the fundamental question that's before you tonight.
How was the
Right.
revenue collected?
Chair, I think we've got some questions from some folks on this end, so you may want to entertain or specific to this item.
What is this exactly?
This is the lighting and landscaping district, and it has an assessment tax. So
Also it's an
there's a
assessment
tax
tax.
on this, and the tax revenue is no longer keeping up with the cost. So the revenues are going to be about 900,000. The cost for this upcoming fiscal year 24, as if we maintain the level of service, will be about $1.7 million. So the question is, do we want the general fund to subsidize this? Do we want to reduce the level of service in there to be in alignment with the revenue for the lighting assessment
What is-
district?
In this level of service,
I'm sorry?
what is included?
Sure. I'm going to have Ted speak.
We also
to
don't know the
grade
revenue.
level.
We also don't know the revenue source. I think we're not understanding that. At least I don't.
Sure.
It's a tax, but like,
It's a property tax. It's a special assessment property.
and how
tax
much is that currently?
At 900,000.
No, per parcel.
I don't have the specifics on that.
I can help with that. So it's basically a 4-tiered revenue model. So depending on where you live in the city, the benefit that you get from, say, major thoroughfare street lighting versus like if you live in a neighborhood that has Edison lighting versus you live in a neighborhood that has, say, city-owned street lighting, you have a different assessment. And so I think currently it's somewhere between $80 to $100-something per what we call like an equivalent dwelling unit. And so we do this evaluation to determine what's an equivalent dwelling unit. So, you have to basically, you take a single family house and a multi-family and you do all this math. So like once that you do that assessment on all these properties throughout the city, and I think there's maybe about 10,000 equivalent dwelling units calculated, you get, as John had said, about $900,000 in revenue. Now, what this pays for is the city's landscaping contract to the tune of, what will be $600,000 or so in the coming fiscal year. Our urban tree maintenance, city tree trimming and removal, which is, we have a fixed 3-year contract. It's about $550,000. You have some of our parks and facilities salaries that are paid out of this. You have our traffic signals, which the major cost there is the cost of electricity, which is going up significantly for traffic signals this year from Edison. Your street lighting costs, and then, various associated operation and maintenance costs with those types of things. So as John's speaking about level of service, obviously one of those options is significantly cutting down on maintaining the city's urban forests, maintaining this landscaping in the parks and the city's open spaces. And so that might not necessarily be, considered a choice because we need to keep those up. But, obviously that's something that can be done is reducing the maintenance of those facilities. So I think what John is saying is basically talking about returning to a vote to make that a net revenue model, or reducing the services, or supplementing it with a general fund, are basically the choices.
Sorry, I was gonna ask, it sounds like we're contracting with the third-party vendors. Has anyone
The
looked
majority
at,
of that is, third party.
is it possible to bring it back in-house would that result in any savings?
We really don't believe so. We think that, especially for, one of the items we're bringing to the council in June is a new landscaping contract. And we went out to bid for this twice, and we had a lot of responses, and we're, basically doing the most qualified vendor at the lowest cost. So you're really talking about a very, very competitive, very small margin type of service. And to have facilities, have city staff do that, we're talking about really high overhead margins. Plus, some of this work requires specialty skills and licensing and things like that, and equipment. We actually don't have a boom truck that West Coast Arbors is. We actually have to borrow it sometimes when we replace the lights at the baseball field. So you're talking about a major capital investment as well as staffing to actually accommodate that type of service level.
So between the 600 and the 500, it's about 1.1 that we spend between landscaping and arborist.
We will. Right now, our landscaping costs are a little less because we're on an basically have really old rates that contract is expiring. So it'll go up a little bit.
And then that's kind of comparable to other cities with similar footprint or.
Yeah, absolutely. I mean, there's a lot of park space in the city. It's close to 100 acres for compared to the city size. We have, the Arroyo parks, we have Garfield Park, and then we have over 10,000 trees, and we have a pretty comprehensive tree program. So, I mean, as far as Southern California goes, you don't have those types of, cities that have that massive of an urban forest.
But a lot of our parks are fields as well, though. So, I mean, is that part of this cost as well?
Yes. So basic field maintenance is included in the cost.
And I'd like to ask if there's an assessment on what's charged to like AYSO and Little League.
That's a really great question. Actually, we're having those conversations now. We just last week had we've been having meetings with AYSO and Little League about cost sharing. They too invest probably about $80,000 a piece into some of this field maintenance. So we're talking about what those costs are, how can we share them, and primarily how can we agree on a sustainable model for youth sports.
Right, because I mean, I think when we have people kind of coming from all over to use the fields with AYSO and for Little League. But I'm a little bit concerned, and I think we have to be thinking about the revenues and what we're really doing kind of all at once, because I'm a little bit concerned about tax fatigue. Because you're seeing the city side of it, but as residents, we have a school parcel tax, a school bond tax, the UUT, the library tax, and so which have all been recently updated. So wanting to make sure that you get the coverage that you need, but to be strategic about it so that.
On this, I think, and I may be wrong, but from what I've learned in doing a lot of research, I believe we did go out on this particular one not too long ago in an attempt to increase it, and it didn't pass the vote. We failed. So that's something to consider as well. So that's the reason why this is a bigger policy decision, and we certainly are looking for input from you as well, which we'll share with council, because it's either we continue supplementing the difference, because we know the costs are going up. I think Ted did a great job of breaking out all the costs. And I mean, the utility costs alone are increasing significantly. So we need to decide, is this something we continue paying the delta? Or do we either adjust the service models, or do we go back out to the voters? And it may be a combination of things, but we want to make sure, I think going back to the initial discussion we were hearing amongst the commission, starting to think more long-term,
Mhm.
these would be the types of things where if I bring you in the next few months, financial planning, these would be the types of things we need to really delve into. These are bigger discussions for the city because we can certainly continue supplementing the difference and paying that delta, but do we want to? And is that sustainable? So it's right in line with what you're all asking
Mhm.
for. Because it's bigger decisions and we need direction from all of you on where you want to go with it.
Is there any possibility of reallocating funds that are on projects that are in flight? So for example, the golf netting, $700,000.
That's an
So the interesting thing about that is that this fund is not used at all in CIP. So the netting, for example, comes out of a
was
fund for,
The golf.
Yeah.
Yeah,
Yeah.
don't argue with,
That's
don't
the
argue with
enterprise
the
fund.
example.
Yeah.
The question is there a way to reallocate funds that are currently in flight or projects that are currently in flight to handle this?
oh, you're talking about removing
Reallocating funds.
fund balances. That's a good question. I mean, I don't know if it's sustainable is the issue because those are just funds that we have accrued versus, annual revenue. But, it's something that sort of.
Yeah, so-
So technically, at the end of each budget year, the money goes back from the capital improvement projects that haven't been completed or started. If they
Mhm.
haven't been initiated, they do revert back to the general fund. And then you decide if that's where you want to spend it. Right.
So more to the point. So most of the CIP, so earlier in the presentation, we have about $1,265,000 programmed out of the general fund and general fund reserves for CIP projects. The rest of the funding on the CIP projects is coming from special revenue funds. They're restricted funds for very specific purposes. So you cannot commingle those into this type of activity. Those funds are broken out. Those projects are listed in the CIP in those pages 54 through whatever, where you'll see the breakout. Now, one of the things I'll point to in your binder on page 142, you will see the composition of the various components that make up that $1.7 million ongoing operating cost related to the lighting and landscaping district. And then further behind that, in additional pages, you'll see more granularity of what those numbers are. So I just wanted to kind of point that out so that for discussion purposes for the commission, that you can look at those to get a better insight into more granularity on the different components of costs that are coming into that $1.7 million figure.
Thank you, John. Appreciate that.
Absolutely.
I guess this is one of those things, and maybe I'm going off script for the moment. This is one of those things that makes our city livable. This
Yes.
is one of those things.
Quality of life.
That increases the quality of life. And as I age out of this city,
Yeah.
I no longer have children in AYSO. Okay. The people who buy my house are going to have children who want to play AYSO ball.
Right.
So how do we make sure that we sustain these things?
And so that's really the purpose of this, is really to kind of foster that discussion at this point and seeking direction.
Chair Giuliani?
Yeah.
Could I request that we put this as part of our work plan for this coming year for the commission, where we actually do a deep dive into revenue analysis and considering how we are going to source for revenue and looking as well as expenditures?
I think you have a convert.
And I think
Yeah.
there's an item later on tonight where you will be talking about your work plan. So great timing. This concludes our presentation specific to the budget. So at this time, what we'd like to do, there's really two things we're asking from the commission tonight. We certainly are asking for your approval of the budget and direction for it to go to council next week. And also we're asking for your input and your feedback, because there's been a number of important issues raised tonight. And as I mentioned earlier and committed to all of you, we were taking diligent notes because we will be providing an additional document to our council agenda item for next week, letting council know all of the discussion that took place tonight. So at this time, Chair, we'd like to open it up to questions, comments, feedback, reactions, and ultimately we are looking for direction from all of you tonight to proceed with moving the budget forward to the city council. So we know this is a lengthy, I'm looking at the time. I think we've been going at this for 3.5 hours, but this is super important to us as it is to all of you. So we'd like to open it up to questions at this time.
Well, one of the questions, please sit down. Please sit down. Please sit down. Mr. Betta, please sit down or remove yourself. Thank you. Not quickly enough. Please. Please.
We'd like to open it up for questions for you at this time.
Yes,
Thank
I'd also like a recommendation was made by Commissioners, anyway, Fred and Sheila, okay? That we have a second working session between now and the June 20th date or.
Well, our plan is this item is being presented to council next Tuesday for
understand.
consideration. If the commission wishes to have further discussion, we can certainly work on doing that. I do want to make clear that some of the questions that are being raised are going to require a significant amount of analysis. And frankly, with all honesty to all of you, there's no way that we can turn around the level of comprehensive discussion that you're looking for between now and then. There are bigger issues that are going to be a little bit more involved where we need the time to prepare. And we certainly would like to have whether it's experts, as you all know, we're also in the middle of a city attorney transition. There's quite a bit going on. And I don't want to promise something that we cannot deliver. What I can certainly promise is more opportunities for discussion. I'm just not certain that can happen in time for the budget approval. Yes, Commissioner. No, it's actually on the agenda for next Tuesday night for council's consideration of approval. Next Tuesday night.
Okay, so I would like to go ahead and present some analysis via Zoom. I think we've got ahead. I think I need to be placed back in and then go into some of my questions if possible. I'd like to give other people an opportunity to give questions first, but maybe if I can ask Stephanie to set me up on Zoom. Here.
Any other questions? For me?
No.
I thought it was the
Yeah.
21st. Okay.
So just to clarify, we're presenting it to city council this coming Wednesday, June 7th, for consideration for adoption, along with the resolution. The second opportunity, if the council decides to defer or give further direction, is to re-present it again on June 21st, 2 weeks later. So what we want to do is have a budget for July 1st, the start of the new fiscal year.
So, Fred, what was the question behind the question?
Well, the issue. Liability.
The insurance liability, yes.
And we were discussing the fact we were discussing the fact that substantial portion of that was current.
Correct.
And we wanted to propose that you give us more detail on that, and we could have discussion on that before the city council approved the budget. Now, we said earlier in the discussion that city council meeting for final approval of budget was on the 21st.
Mhm.
Is there any reason why that would change to be earlier than the 21st?
Are you asking if the council can approve the budget sooner than the 21st?
That's correct, yes.
I would probably defer to the city manager on that aspect of it.
Okay.
Commissioner, that was our schedule as it stands as of right this moment is we're taking the budget to the city council next Wednesday night for consideration for approval.
I request that you defer that until the 21st, and we can have our meeting to discuss the issue that we view that issue with you and come up with a conclusion on that between now and the 21st.
We can certainly work with all of you to try and accommodate that, and what we can do, because the item it is already posting as we speak. We can include additional information for the city council for them to be made aware that that's the direction we received. If that's the majority direction we received tonight, for that to be the case. In all transparency, what I was mentioning earlier, I think we would need some very clear direction from the commission on what it is you're looking for, because if you're looking for an extremely comprehensive deep dive on insurance liabilities, I'm just not sure that, I am not certain that we can have that level of comprehensive discussion between now and June 21st and give staff the ability to prepare that level of detail, given all the other things we've got going on. So we would need some direction from all of you on what it is you're looking for. We will share the feedback we receive from you tonight with the city council and also solicit their direction. And if the city council selects to defer further discussion to the commission, they may do so next Wednesday night, at which time we will work with all of you to find a date that would accommodate a meeting, with the hopes of that issue or issues being resolved in time to get back to city council on June 21st, because we absolutely are aiming to have our budget adopted by July 1st.
While I understand the intent to have and the goal of getting the budget passed, and we've had some meetings canceled, even just in this budget process, down to the fact that I didn't actually go out for my birthday because I thought we were going to have a meeting. Then we've had an initial presentation with questions, changes were made, and now this meeting has been taken up with a lot of presentation time and not a lot of time for us to discuss, which I think we're about to go do some discussion now. This is a cleanup stage, right? We're in a cleanup stage. Some of these questions are not that hard to answer. I mean, and the reality is, like the insurance fund, we pay premiums every year. So I think we can have an answer on the insurance fund. We can have a conversation about that tonight. But I think, my goal, and I think everybody's goal should be, is that we get a budget that we can afford and that we can make sure it's sustainable versus having it done on time. Because so if we pass a budget and all of a sudden you go off with staffing and hire the staffing and we say, oops, we didn't have the money, again, that's a problem. That means we have to fire people. So there are certain things that we have to really consider. I'd rather actually even say we reduce certain items and then we create appropriations mid-year when you've gotten the 5-year projections. I mean, it's even in the budget policy addition that was requested to be made last time, the idea of going into deficit spending, it was then you have a plan prepared for how you're going to address it. And not that you're going to plan to have a plan, but you have a plan that you're going to say how you address it. So even that didn't work. So let's right now hop into it. Let's sit down and have some conversations, because I'd like to review why I'm feeling panicked a little and why I'd like to have this conversation on this. Can we do the Zoom? Can we do the share screen? Okay.
Yes, can we limit this to 30 minutes? No.
I will try. Sure. I won't go into full. I am a participant now, Stephanie, because I was knocked out. Okay, so first I'll take a look at this slide, and I took a look at our revenues, wages, and operation and maintenance costs from this current year's 2022, 23 estimated, and then what's proposed. In the files you have right now, our revenues projected an 8% increase. When you actually look back at 2022, 2023, we had a 6% increase. So while we had an 8% increase is projected for our budget, we're looking at a 12% increase in wages. And we're looking at a 10% increase in operations and maintenance costs. If you take a look at it at the 6% revenue increase number, we start going into a $588,000 deficit, and that's strictly wages, operations, and maintenance. It doesn't include capital outlays. It doesn't include any other additional fees. Then I took a look at operating funds, and these were whatever funds I saw wages allocated to it and operating maintenance, because my biggest concern is that we can pay for the staff that we're looking to hire. If you take a look at Prop A, you see, without even looking at operations and maintenance, we're going to have a change in this 2023 year. We're going to end up with a deficit of $73,000. So the deficit spending in there, we're supposed to be balanced at the individual fund level. We do have money in fund balance in that. Prop C is doing great. I'm not sure what's going on there, but they've reduced the wages associated with that. When you look at street lighting, yes, that one is a significant deficit, and that's going to have a reduction into our fund balance. You go down to our state gas tax, also going into deficit spending on that. And we're taking our fund balance from 788,000 to 23,000. You come down and you look at Measure W, also will have deficit spending there, and we'll have a negative fund balance. So that's really the crux to my concern, is that we're not having balance across these operating funds. So then I take a look. Let me hop over here for a moment. Sorry. I wanted to take a look really and have an understanding of what are assets and liabilities in the non-general fund funds were. And when you take a look at it without water, because we keep talking about this cash position that we have, and we have this great cash position. We have this great cash position. So when you take out water, we have $26 million. Then we take a look at liabilities, and I took out the water bond liabilities because that's a significant amount. What we end up having is 17 million in the amount of equity that we have in our other funds. I've struggled to understand how much we actually are, what our true liabilities are. Part of it is just the way the funds have been described and a lack of description in some of the funds in the budget. So when you take out the public financing authority, which is a bond that's not related to water, then, okay, our liabilities drop down and we have still like 5.3 million in liabilities. Then you take out the insurance fund, which we need to pay, and we still have 3.5. And then I looked at the negative balances that we are accumulating in our special revenue funds, which is 1.7, and the negative balances that we're accumulating in grants, which is 947,000. And so often when I've asked about this question before about our negative balances, the answer has been in grants. Grants is not a significant portion of this. So we need to actually go back and focus on our operating funds and identify what are our true liabilities that we need to be paying for, because we have significant liabilities coming in. And that's what I'd like to talk about, like the insurance fund. I don't understand why the insurance fund has not been funded to at least zero. Why we're holding a negative balance, let alone funding it to the level we're actually required to by our policy. I don't understand why we're deciding that we're going to go against our policies for the balances of our funds. And if we have such a high general reserve or general fund balance, which I will pop over here for a second. If we have such a high general fund balance, and we do, let me pop here. So for the general fund balance, we're supposed to take it off of our revenues. And it's supposed to be 30% of the revenues. I have to do it from last year. You can't do it off of the projected future year because we don't know if those revenues projections are true, right? So we have a $10.9 million general fund reserve floor. Right now we have 22 million, and that's including the designated and undesignated funds. Now, the premiums, we have to pay. I'm not sure why we're thinking that we don't have to pay it, why we don't have to put it in the insurance fund and how that's working. If there's something I'm missing about that, I'm happy to hear more. We do have 70% of claims. In this case, I didn't have the claims data, so I just went ahead and used the expenses that were projected. Yet we are dropping down. So total needed to fully fund the insurance fund would be about 5.3 million. If we're looking at what it is to get our balance up, then fund the claims and make sure we also hit the premiums. So after funding insurance, and I decided to, be more conservative with the liabilities, we're suddenly dropping down to 15 million. Then we look at just undesignated balance, we're dropping down to 11.4 million. So that's fine. We can actually drop down significantly. We can even change our general fund balance, like minimum threshold, and do like what other cities do, which actually really focus on the emergency side and the stability fund. Those are decisions to make. But I think we really need to start considering, are these true liabilities and do we need to pay them? Because what I'm concerned, and I keep hearing over and over again, is saying like, we have such a huge balance. But if we truly have liabilities, and if we truly want to go for bonds, we need to actually clean this up. And we need to address these issues. And we have to go, this is really what money we have. I'm not that interested in telling the city staff how to spend their money, right? Because that's, they know better than we do which departments need staffing, whatnot. What I'm more concerned about is making sure that structurally we get the budget right. And structurally we have an understanding of how our finances are working, so we can say, this is what we can afford, this is what we can't afford, these are the real decisions that we have to make. And quite frankly, I look at expenditures that are in this budget, and no offense to the city council, but your budget went up a lot, guys. I'm not sure if you know this or have even looked at it, but the city council's budget jumped from what, 45,000 in 2021, 2022 to 81,000. That's not a staffing choice. That's actually just decided to up their council budget. There's money in here that we can actually really consider and go, should we be spending the money that we're spending in these areas? Or do we really need to think about what we're prioritizing? I'll leave it at that unless you have any questions.
Thank you, Sheila. I appreciate it. Are there any questions? I specifically asked the finance team not to be prepared to respond because they didn't have the data to review and to analyze. So do we have any questions? And are there any questions we have that we'd like the finance committee or finance team to do a deep dive on?
Yeah.
Please.
Sorry.
Ghost. Please.
No, I think it's a great point, especially kind of looking at this street light situation. How many of our funds have is running structurally deficit on an annual basis, right? There's things that are truly maybe one time, or just, kind of deducting from what we have, and things are structurally non-sustainable. And I'd be curious to just see all of that listed out and say, yeah, these are the funds that are kind of structurally running into problems. And I was looking at one of the funds that I guess are internal, there was something that was like an internal services. I don't know if that's kind of just internal revenue allocation and expense allocation, but just making sure that all the departments are paying enough into it if we're paying out of it for something that it's properly balanced. And then we have this page on one-time general fund expenditures. I look at this and I'm like, I don't know if these really are one time. They're more kind of ongoing. I feel like a lot of these, it's like, okay, furniture for team room. Yeah, but I'm sure there's going to be furniture for other rooms that's going to come up that people are going to need, or network hardware replacement. I'm sure other hardware will get replaced. It's like, these are kind of to me, it seems like things that a lot of it needs to kind of continue. I almost just say, I think these are booked into the budget as
They
is.
are These
But-
are one-time, very specific to certain departments, hence why we put them as
No, but
one
I
time.
just feel like once you have enough different departments and different things going on, there's just one-time things every year.
There are, however, for the purposes of this, the budget we're presenting to you as a commission and to the council, we wanted to be very clear on what the total one-time, because we want to make sure that there are things that are not going to continue from 23-24 to 24-25. So
Painting of Camp Med, I'm sure something else will need to be painted next year. So that's what I'm saying. It's like things will happen.
yes and no. With all due respect, that there's a number of items on that list that are very specific to next fiscal year. And for future years, as I mentioned earlier, there's going to be, even this year, the directive to
So I
staff
guess the
was,
Question is, in the 2024, 25, 25, are we gonna get another one-time list of like 1.5 million? Right? Or is that list? gonna
that's
be
not the
zero?
goal.
So if it's truly gonna be zero, then we'll say this is truly gonna be one time. But if we get another one-time list of, a million or two, then
Our strategy is that that's not the case. That's the reason why we very clearly identified one-time expenses. And as I mentioned earlier, before we start the budget process, we give directives to staff at all levels. Going into this budget cycle, the directive was actually to maintain status quo. Unfortunately, we did have a number of things that came up that really are impacting, for example, all of the housing element implementation programs that are about $1 million that we didn't have anticipated. So I just want to be very clear that we do roll out strategies of how we're going to do our budgeting process. And the goal is to be as conservative as we possibly can.
and I just, so I am kind of curious. I mean, you have a question about, 250,000 for HVAC units, but some of this is like, we have the removal of the, racial restrictive covenants, which, we should definitely do, but it's budgeted for 100,000. Is that just legal fees for removal?
That's the fee for doing the analysis and doing all the work that goes into going through every parcel with LA County Assessor's Office and going through the process. Trust me, we were sticker shock at these numbers ourselves, but we contacted other cities who've done the same initiatives to get cost estimates because we wanted to get as close to what the actual cost is going to be as possible for the purposes of the budget. No. Absolutely
Yeah.
not. And actually, council had quite a bit of discussion on these items, and we did get cost estimates from various firms that other cities are using.
I'm equally concerned just on the expenses that we have, just because, our revenue is what it is for the most part. We can't be just raising prices on residents, like companies can raise prices on their products, so.
And I think keeping in mind that costs of everything has gone up. So I think
So, like structurally, I know cities all have this problem, right?
it's across the board.
Yeah.
The discussion we're having tonight is no different than
But
discussions I've had in other
what
communities I've
is
worked in.
saying is we should get better clarity on what the extent of this problem, so we know how to solve this problem.
Thank you. Could you stop sharing unless there's something else you
Oh.
have in mind? Okay. And may I propose, Sheila, you've raised some very compelling questions. Thank you. We have, as I understand it, the goal is to present and have in place a budget on July 1.
Mhm.
We have, at this point, less than 30 days. Okay. Is there an appetite, or pardon me, before you go there, is there any more discussion by the commission?
Yeah, I have some discussion.
I knew.
I'm good, I'm good.
Go ahead.
Just my kind of big picture view of this is that the big challenge is sustainable revenue to do all the things that we want to do and have the city fully staffed and providing all the services we want to provide. And so I think there was a comment earlier about including that in our work plan for next year. I think that should be our highest priority. And I think there is just the general notion of sustainable revenue, but also these discrete problems that some of which we identified, the street lighting and landscape. How are we going to solve those individual problems for those specific funds that have, their own revenue sources or whatnot. So I think that's something that I'd be okay with not trying to solve in this budget, but to put it over towards further deeper discussion. The insurance fund, I think we're all kind of on the same page, it seems like. I don't have a great understanding or handle on whether this is a true fixed liability or it's something that kind of ebbs and flows depending on what our actuaries are projecting and what I would imagine our risk management people and city attorney are projecting about, the likelihood of liability and various claims. So I just don't have a good handle on that. I'd like to hear more about that. And I'd also like kind of to see visually how we are rationalizing we're going to be paying out in the next 12 months versus, a longer time period, as John was talking about earlier. I like to kind of just see that. And finally, in terms of whether we want to approve the budget or not, I think we're seeing warning signs. I think we're seeing deficit issues. Like those are pretty obvious. But I don't know whether there's any like really specific concrete action that can be done or concrete changes to the budget that we're looking at that are going to solve these problems. I don't know if any of the commissioners have any thoughts on that, but I mean, the kind of obvious one would be don't spend so much on salaries, but I don't think I'm in a position to kind of, pick and choose who we're going to hire or not hire or whatever. So I don't know whether that's a reason not to approve the budget. So I'm kind of just struggling with that because we have all these kind of structural things and problems and warnings, but we do need to get a budget passed. And I know the city is committed to working with us and the city council to solve all these problems. So I'm confident in that, and that gives me some reassurance. But I guess my question is whether the commissioners see that there's certain concrete things we can do to improve the budget in a way that all of us would be good with recommending its approval by city council.
So thank you. I appreciate that. And you said many of the things that I was thinking, and you said it more elegantly than I could have, obviously. So the Ed presents us with a question. Can the commission recommend to the council that they approve this budget with the proviso that we're going to have another March 16th? That was a horrible meeting. I mean, let's be honest, it was bad for us. It had to be horrible for you folks. Okay. We don't want that again. We're trying to avoid that. So can we, as a commission, approve the budget, recommend that the city council approve the budget with the understanding that we're going to continue the growth that we're currently experiencing and the questions that we're going to continue raising the questions we're currently raising and working with our finance team to resolve those questions over the next year. Because I don't want this conversation in June 2024.
Can we specifically recommend that city council adopt it and with the specific items that the commission, the finance commission, is questioning and is going to look into deeper, wants city council to be made aware of, like the
We said that
insurance
earlier.
fund, like the streets and lighting.
Yeah.
Just
So,
to give them a heads up that this is not, this is not a perfect budget, and there are some issues that are going on here and some warning signs. But under the circumstances, we've got a good package for this year. Let's move on, but here's what you need to be aware of.
So I'm going to disagree really quickly because we have financial policies that go along with this budget that it's in violation of. So I'm not sure how we can go ahead and say, go ahead, move forward with this. And there aren't even explanations. Like on the insurance fund, if you're going to be in violation of the insurance fund policy, then you should actually have an explanation for that. But even on its number 2, the balanced budget, we have a number of funds that they're not grants that are supposed to be balanced. Our job is actually to say, make sure it's balanced. And I'm not sure if you guys are aware of it, state law. State laws, we're supposed to have a balanced budget. So part of us is not just taking in presentations, nodding our heads, but actually going through and saying, no, you have to go back to the drawing board on some things and fix some things. And I go through and when I look at the general fund balance, it's okay, then if we properly fund what we're supposed to, then the city council has much more real assessment and understanding of where we stand. Right? I don't feel like it's fiscally responsible on our part to go ahead and say, yes, go ahead, move forward on this. And we might end up in a serious problem over the course of the year because so I'm not sure how we can go ahead and say that. This isn't an emergency spending situation. We shouldn't be ones deciding which positions they take, but I do think there's something about prioritization. I haven't seen the work done by, quite frankly, like the council, even as I said, I use the example of the city council because that's an example of one place where you say, is there some place where do we actually, if you start from a zero-based budget, people say, this is my wish list. This is all the things I want and what it would be for, the best running department. That's great, but we have to go back to, can we afford it? And can we afford it in the long run? And that's I think what part of our job is supposed to do as commissioners is actually say that.
Is our job to not create, take a red pen and put lines through certain items, but to call out the fact that this budget has challenges or concerns so that when the city council looks at it, they're going into this with their eyes wide open and they are mandating that we and the finance team and them, they continue to lean into the hard work that needs to be done during the upcoming year. That's where I'm leaning, Sheila. You've done a great job of shooting off some great flares. You really have. And I compliment you and I enjoy working with you because of it. However, we're not going to resolve that between now and June 21st. We're just not. So can we, my position is we should be thinking about telling the city council that we believe this budget has merit. However, there are certain areas, certain weaknesses that need to continue to be explored, continue to be examined, continue to be worked on. And we will work with them, join hands with them and make that happen.
And they can make the decision if they want to approve it or not.
Well, and I think it is the city council to make decisions when it comes to the policies. And we've heard this repeatedly, that these are policy decisions that the city council needs to make. But they need to be aware of these issues and it needs to be taken to the city council and say, do you understand the true operating deficit that we're in? Right. I won't vote for it because I'm not going to go in violation of policy and state law, especially when it's not an emergency situation. Right. So, but I understand if the rest of the commission would like to do that. However, I don't think we'll ever get the discipline on the commission and on the city council side in this process. If we always say, okay, making this deadline, especially having meetings canceled, we had several meetings canceled. So could have been opportunities for us to actually dig in and work through this and make sure that it's what was getting to the city council was really something that we all felt comfortable with.
Well, and I appreciate your frustration and I believe we need to exercise the discipline also in this upcoming year. So yes, I hear you, I understand you. And I would like to propose that we recommend to city council that this budget is imperfect as it may be, it is a movement in the right direction. That there are certain areas that would like to flag on it that need additional attention and identify what those are. And if one or more of us need to come to the city council meeting on the 7th and make that part of the record by explicitly expressing that, then I volunteer to do so. But I need some help from this group creating that laundry list of items that we want them to continue to pay attention.
I second that motion.
Stephanie, I think you need to call for a vote.
I do. Chair Giulioni,
Wait, can you repeat?
roll call, sorry.
I think we're moving to.
Do you want me to restate in a way that's? a
Yeah,
little-
it's a
Okay.
recommend approval of the budget with the qualifications, right?
Okay.
Yes, please.
Yeah. I said something smart and I don't even remember what it was. Dear God.
What I heard from the
Recorded.
chair.
That we play back the
What I
recording?
heard from the chair was that the Finance Commission recognizes the movement of the city budget in the right direction. Yet they've identified a number of areas that we need to work on collaboratively between the Finance Commission, council and staff to identify strategies for improvement, ultimately reaching an area where we are not in any type of deficit spending. I believe the items that were identified included a comprehensive discussion and a plan for the insurance fund, a better understanding, in addition to looking at areas such as LLMD. Those were the two big ones for me. Also going through the positions that are being recommended, gaining a better understanding of the timing of those positions. And we have a lot of that information that we can bring back. That's what I got, Chair.
That sounds very comprehensive. Thank you. You did a better job than I did, I assure you. Second. Okay. Roll call, please.
Just to clarify, the motion was by Chair Giulioni
It was.
and a second by Finley.
It was
Okay. Roll call, Chair Giulioni,
approved.
Vice Chair Rossi.
Can I make a clarification? Was that to do that before the 21st? Or was that sometime after the approval of the budget? I'm sorry, I was a little confused.
Do we want to add in at council's discretion whether to bring this back to us before the 21st or whether they're going to adopt? But I don't think we're gonna have time, like you said, let's do
No,
the
we
deep
will
dive.
not.
Well,
Yeah,
so because I agree with your entire motion, but I won't support the budget if we don't have that in. So I say no.
That's your discretion as a commissioner.
Yes.
Yes.
Commissioner Quaid,
Approve.
Commissioner Elsner,
Yes,
Commissioner Finley.
Yes.
The motion passes.
Thank you. So,
I'm sorry, Chair.
yes,
Could
ma'am.
I take you up on your offer to have the finance commissioner or you as chair come to the June 7th meeting or some subcommittee? Okay, and to just sort of help the commission understand some of the concerns that have been raised
The
tonight.
council.
To council, yeah.
Yes. And what I need is, what we need, whoever attends, is the detailed understanding of what those were so that we can hand those over to council. Okay? Not the resolution, just what the issues were. Because the resolution is not possible. Yes. Yeah.
So what we were going to do was actually based on the discussion tonight is actually do an additional document to the staff report for next Wednesday night to go through this evening's discussion and identify all the areas that you've discussed and mentioned that you want to have further study on and make sure the council is aware. And we do have a tape of the meeting as well, so we'll be going back and making sure we have a detailed memo that's added on as an additional doc, which also becomes a public records. And I believe you do have a council member who's a liaison to the commission. So my understanding is during that discussion and deliberation, your council representative will also have an opportunity to chime in. So it will be documented formally in a memo that will become a record with the agenda item for next Wednesday night. In addition, after the presentation, when council starts discussion and deliberation, your liaison will also chime in. And should any members of the commission wish to attend the meeting and also provide testimony, you are certainly welcome to do so.
Thank you very much. And will we have an opportunity to review that memo before the 7th?
If you'd like, we
I
can
would
have
very
staff
much-
drafted and
Very
share
much
it with
like
you.
to, yes.
We can certainly route that to all of you.
I think all the commissioners would like to do. Yeah.
So I'm looking at finance staff because they will be writing the additional document and transmitting it to all of you for review. And you are more than welcome to add your input, and we'll make sure it's a comprehensive document.
Whoever
Uh,
send it to us, track changes on, please. Thank you very much.
Will do. I have a direction from Deputy Director Sulie Tran that we will get that to you on Monday, and we can track those changes.
Thank you. My goodness, that was just the first agenda. Third agenda item, the Commission Congress with plan and accomplishments.
Yes, so we did this last year, and this is kind of a fun one. You get to reflect on what you've accomplished in the last fiscal year and decide on what things you want to attempt to accomplish in the following year. This will be presented at the Commissioner Congress that's about to happen on June 28th at 6 p.m. Sorry, I had a date typo there. My apologies. So I'll open the floor to the commissioners and they can tell me what they would like to include as their accomplishments and their work plan.
Stephanie, can I just jump in really quickly? I'm sorry.
Of course.
I think typically that's been like the top three, right? Like I think the commission has to pick their top three accomplishments and then sort of their top three work plan items. So it's not-
Yes.
yeah, thank you.
Start with you.
I was going to say, for the purposes of this commission, you can have more than 3 goals, because I think just tonight alone, there's been a number of things raised. And I think because
Long memo.
So you will be presenting this, a representative from your commission, the chair, or whoever the chair designates will have an opportunity to present this to all of the other commissions and council at the Commissioner Congress. This helps us as your staff liaisons, because then we start agendizing the next year ahead based on your work plan. It's also a great opportunity for the commission to decide, once you identify the goals for your work plan, if you'd like to have, some commissions actually have kind of like subgroups of the commission that take on certain issues. I would actually recommend you do that, because if you've got some big topics you want to tackle, I think it would be great if some of you have a particular interest in one area, if you want to have subcommittees of your commission. And our goal as your staff, I'm really here just for the budget piece, but I love this stuff, so that's why I'm sticking around. The finance team will be your liaisons, and then they will make sure that for the coming year. And I think one of the points I really took to heart was not wanting to cancel meetings for the future. So we will work with staff to make sure that we have your schedule for the next year identified. And then with that, we will also start identifying the topics you want to discuss. There's already a couple I took notes on, because I'd like to be able to come back with those topics and even bring in certain industry experts. For example, at your last commission meeting, the starting point was having some discussion on risk and liability. That's going to go, because we're going to be doing the same presentation with council. And I anticipate next year, one of the areas we're going to explore is, what do we do with the insurance we currently have? And do we start exploring different avenues? So I think it's also helping the commission be in line with some of council's goals. So we'd like to open up the floor. Anything you'd like to add on that work plan, and staff is again taking notes.
I would personally like kind of a deep dive on water. We've got Mr. Gerber, and I'd like to take advantage of his expertise on that, but that's one of the things in the last few years that on the commission where I know it's there and I just don't know much about it. So
Did you want the funding on that, the operations of water?
Probably both. And my
Yeah.
suggestion would be, would you also like to take a tour of our facilities?
yeah, I'd be interested in that.
Because the only way I understand water, if when I'm actually out in the field with Ted, and we have Victor here tonight, who's actually one of our supervisors in the water division. And I really think for the benefit of the commission, if you want to gain a better understanding, I would suggest you also do a tour. So if I was you and I was adding a work plan item, my suggestion would be education on water, a site visit to our facilities, and then going through the water plan.
So Victor, you're gonna take us on a field trip.
And I can highly recommend the tour. I've been on it and
It's the best
really
way,
great.
right?
Yes, it's really,
Introducing Victor.
My name is Victor Magana. I'm the Water Operations Manager for the City of South Pasadena. I've been here 13 years. I've been in every position in the water division.
He can talk water.
So if there's something I can share with you guys is how we operate and how the whole umbrella in the basin works. So happy to.
That's good.
Happy to, entertain that, a date in the future so we can do, even if it's,
An off-commission night, right?
with a couple of you first. So sometimes it's a lot to do with all of you, but we can set some time aside and also to accommodate your schedule. We can work.
And Victor, my apologies, I demoted you to supervisor. You're a manager. He was actually recently promoted for all his hard work. I want to recognize that.
I work
Congratulations.
a lot of hats around here, so. it's okay.
Congratulations. Yeah.
Supervisor, manager, in the trenches, anywhere you.
I just know him. He's the water guy and he's amazing at it. So
Yeah, I mean, me personally, I think water, sustainable revenue, and looking at insurance fund risk management, those are
That's
my
exactly where I
five
was
things.
gonna go.
so sustainability,
Yeah, sustainable,
financing.
yeah, and again, continuing the conversation about risk management and interplay with the insurance fund, which kind of also ties into sustainable revenue and deficits and whatnot, and then water. Those would be my big three.
Sheila, how about you?
I mean, along those lines, I'd like to understand all of the funds, to really separate out what are our funds that, like the water fund, what are our, debt service funds, and really understand like where it is that we need to be balanced and where it is that we can go ahead and run deficits. So a little bit deeper dive into that.
On all of the revenue sources, I'm assuming in all of our funds.
I'm sorry?
You want to go into all of the funds, right?
Not
Not just
I'd
water.
like to understand all of the funds and kind of break them out a little bit because it's hard to understand
Yeah.
in that format.
I think I would like to look at those funds that have deficits. and just
Certainly.
Like, why do we have that deficit? Is it a deficit we can live with? Do we need to do something about it? How are we gonna correct it if we need to?
Yes.
Something along those lines.
It would be nice to understand the funds though, too. I'm with you, Sheila, on that. I would like to know what the.
And how they work, maybe?
Yeah,
Mhm.
yeah. Please, don't-
Because they do have different rules to them and they have
Yeah.
different, funding sources and the rules according to those funding sources. And I just would like to understand that. And I would like to sustainable revenue and expenditure budgeting and really looking, this kind of goes along with kind of the policy side of looking at our policies.
That would actually be one of the items you would look at. I know we had talked about it before, but our goal would be that as part of your work plan, you do a revisit of the budget policies
Correct.
and go through each of the policies and really analyze whether or not we need to make modifications, adjustments, additions. So I would hope that's one of the items you all identify for
Yes.
your work plan.
So
So budget policy
and-
review.
And part of it on the policies is to really take a look, not just, the existing policies, but then take a look around at other cities'
Best practices.
And so that we can have a thorough understanding the policies and say what makes sense. Let's pick some of like the best cities in California or other places, or GFOA has them. And then say what makes sense for our city so that we're kind of similar to the zero budgeting. We're kind of a little ground up and like, let's do this so a way that we can go for a sustainable budgeting approach.
Fred, how about you? Excellent. Me too. It sounds like we have a full meeting agenda for at least the next 6 months. Okay? And I'm looking forward to it. Commissioner, pardon me,
Council.
Janet,
We need to do like highlights from,
Accomplishments.
yeah, accomplishments. I'd say mid-year budget should go on there. I mean, that was the first one we've done in a long time and it was kind of painful meeting. But it was an important and necessary meeting and I think that it was good to get a lot of these issues kind of out in the open and get the discussion going. So I would count that as a highlight because it really kind of got us honing in on certain issues and concerns, and appreciate the, transparency and openness and answering our questions on that and getting the discussion going. So
As a member of the ad hoc committee that was formed a couple of years ago, and taking a look at the some of the challenges we were facing as a city, and some of the challenges the finance department is facing, I believe we played a small part in helping stabilize that group, and hopefully they're feeling as supported as I hope, as I want them to feel from me personally. I think from the commission as a whole, we're confident in you, and frankly, we couldn't have these kinds of pointed conversations like we had this evening if we didn't have confidence in you, and confidence in the fact that you're going to tell us the truth.
I'd like to add an accomplishment for all of you. I think observing the commission, I think one of the biggest accomplishments in my mind has been how active you've been. I think the activation of the commission, the involvement, the level of discussion, I think the commission has made significant strides. And I think this goes hand in hand with some of the discussion you've had tonight, because it's really helped us at a staff level, feeling that we do have the support and feeling that we are aligning ourselves as an organization and in a community. And I think the commission has played a big role in that.
I haven't been on long enough to know what the accomplishments are of the commission, but I'd say the accomplishments of the city finance staff, which is you delivered finally, not finally for you guys, finally, we're getting, monthly, quarterly financials, and we're getting budgets that, to Chair Giuliani's point, have allowed us to ask really hard questions. So it's a double-edged sword, but I'm greatly appreciative of the work that you've gone and put in, and to get us those reports so that we can ask those really hard questions, so that we can move this forward. So I deeply appreciate the work that you guys have done. So that's an accomplishment. And I know the devastation that the finance department received. It's a huge accomplishment, massive. Thank you.
yeah, and also on the, audits, we're so far ahead with those. That's been, I think, key in terms of budgeting, because we have better numbers. And so that's another kind of kudo, I think, more to the finance department than us as a commission. But so I think.
But you've pushed us to make sure we're on time, so that's a good thing. Accountability is key.
Anything else?
That was a good list.
That's a good list. Janet, any communications for us?
I just want to say, I want to repeat what Armand said. I mean, I think you guys are, this group is really amazing. So much talent, so much knowledge, and so much experience, and truly the city council, because we are considering so many things right now. We are really relying on you and your expertise to help us along with all the financial matters, the budget, the audit, the everything. So thank you. Thank you.
City treasurer? Okay, fantastic. Fred? Any closing communication?
I've served on this commission for a number of years, and I don't know, Ed agrees with me on this, and also Zen, that it's such a change now to how we have our meetings. Before, we met with the finance division, and we met with the finance department. We met with the chair of the finance department, the director of the finance department, and now we're engaging with the entire organization. We have our city manager here, we have our county department, we have our operation department here, and we communicate with you. We couldn't do this before, and the information you provide us really helps us do our job well, and we can really drill down to look at the issues and understand better how this city works, how the financial aspects of the city works. And really, it helps us do a good job, a better job being a commissioners. And I want to I'm really thankful for that. Thank you. Sheila?
Pretty said a lot.
And we value it.
Mhm.
Thank you very much.
Yeah.
Cynthia?
No, thank you very much to the finance department. I really appreciated having a week to go through this. So,
Yes, that was another improvement.
yes.
That really was. You guys
Yes.
sent us our
Yeah.
homework early.
Yeah.
I like that. Okay.
Yeah,
That was
meant that I
good.
didn't have to sit at my desk for 8 hours a day, every single day.
I like that.
Thank
Ed?
you.
Yeah, I'll echo Fred's comments. I learned, I mean, I've learned a lot more at these meetings with city manager here, with public works director, with all the, department people that come in and give us a little more nuance on what's happening. And that really does help us kind of ask better questions and make better decisions because you're living it day to day and we get kind of glimpses of it here and there, but it's been really helpful. And I also am really want to thank the finance department for their work on this budget. And I think that we're kind of at a point now, different from the past, where we're looking at these sort of like big picture things and how are we going to solve these problems? And that's more of our focus instead of like other issues that we had a few years ago that were like, it was like we were, didn't have that same kind of relationship with city staff and city management. So I think it's going in a really positive direction. There's work to be done, and I'm glad that we have the team in the city that's working on it that we do have. And you're building up the historical knowledge, and I think we're on the same page in terms of what needs to be done. And looking forward to working with you again in the next fiscal year.
Thank you. I echo all of the comments made by my fellow commissioners and just am humbled by being with this group and very proud to be part of this success of our city. So one of the challenges some of the folks in the finance department are going to have to wrestle with is not only are we commissioners, we're also residents. So every once in a while, you'll hear the resident come out versus the commissioner come out. So you'll have to be patient with us. Okay. So thank you so very much. And with that, I declare this meeting adjourned at 10:51.